welcome. You're watching India Market Close here at NDTV Profit. I'm Mahima Vachrajani. With me is Hiral Dadia and Sharad Dubey. Let's take a quick look as to how the markets are doing. It's the second day where we're seeing the benchmarks under pressure. The Nifty 50 down by about 0.4%. Of course, off from its day's low point, but still trading around 0.4% lower, much below the 25,200 levels. The Bank Nifty also seeing pressure, down by about 0.5%, hovering around that 56,300 odd levels. Let's try to pull up the heat map and see as to what are the counters that are actually pulling the Nifty down. You've counters like Bajaj, Finserv, Tata Motors, of course, because of the demerger, we're seeing that price on the chart. But having said that, there's Bajaj, Finserv, Tata Steel, Tata Motors, BEL, Dr. Reddy's, JSW Steel, TCS, seeing significant amount of pressures, and that ranges in the range of around 2 to 1.5 odd percent. There's much red on the board, across the board, that you're seeing. Just a few counters in the red, with Wipro and Techem leading that chart. Tech Mahindra, of course, expected to post its earnings today post market hours, up 1.2%, Wipro up 1.3%, followed by something like Max Health and Apollo Hospitals, which is fairly doing well in trade today. Let's try to pull up the sectoral heat map and see as to how sectors are doing. It's red across the board yet again. Nifty IT down by about 0.1%, Nifty Auto down by about 0.4%. But the real pressure is here. The PSU banks down by about 1.5%. The consumer durable space down by about 1.4%. The Nifty metal also down by about 1.3%. And Nifty realty also continues to be under pressure, down by about 1%. Let's try to pull up the advanced decline ratio, because that will give us a picture as to how the broader end of spectrum is doing. And that chart has widened like a crocodile's mouth throughout the day. I mean, right now you have around 1,880 odd declines versus that of just 500 odd advances, and that gives a picture as to the pain that is there in the broader end of spectrum as well. And Hiral, that's reflected in the mid-cap and the small caps indexes also.
Absolutely. Thank you, Mahima, for that. In fact, let's quickly just look at the mid-cap and the small-cap index as well. At the day's lowest levels, cuts of around 0.8% coming in there. Few names which are under pressure. You have Gokuldas Agro, which is under pressure as well from the broader markets. Fermenta trading under pressure. You have a Shilpa Medicare, which is down in trade. Vascon is down around 5 to 6%. Natco trading under pressure. What's interesting is that Dream Folks in trade, last 3 to 4 trading sessions have been really strong for this counter. If you just pull up a 1 week chart, you'll see the kind of gains that have come in for a Dream Folks as well. Repro, again, MTAR, 11 to 12% is the kind of up move that you're seeing. Landmark, on the back of Q2 update, that stock is seeing some smart moves as well in today's session. MapMy India continues the upward trajectory. Anand Rathi on the back of earnings is also doing pretty well in trade. So few movers and shakers there, but let's get in. Kush Bora, founder of kushbora.com. Kush, good afternoon, and always a pleasure to speak to you. Taking the way the profit booking that has come in today's session as well. Yesterday, a similar session was kind of sideways throughout the day. Today, that pressure has built in. What is that strategy that you would advise investors to look at from a Nifty and Bank Nifty perspective now?
Sure. Hi, Hill. First of all, very good afternoon, and the pleasure's mutual. Always a pleasure to be here and interact with you and the viewers. I think what happened today is more of expiry move. I would love to attribute it precisely and only to that, because yesterday we did kind of hold ground and did in fact recover ground when the rest of the global markets weren't doing all that great. So there's definitely strength at lower levels. Right now, if you see, there are some positives in the moves that the Nifty is making today as well, which is it's taken an immediate support of the 20-day moving average close to the 25,050 zone. You're already seeing some recovery from the low point of the day. Anyway, there is a strong support zone, medium-term support zone at 24,900, 25,000, the one that we've been talking about practically all of last week. So that's very much into play. I think someone who's a little risk, or rather someone who can take a little risk, should actually go out and create a long position at these levels with a stop loss in that 24,900, 25,000 zone, or higher levels of 25,300 and then 25,500. So when we say buy on dips, these are the kind of dips that we talk about. Just because this magnitude is slightly strong on the sell side, I suggest a lower quantity to begin with, and you can always average it on the upper side. Now, the interesting part is the Bank Nifty. Yes, even this is seeing some profit booking, but this has been on a strong footing. Consolidation in the last 3 sessions. This is a healthy sign for the index to make that next leap of up move. So for targets of 56,700 and 57,000 with a stop loss around the 55,900 mark, I think a bank Nifty is also a long, and that's the more preferred one between the two Nifty and the bank Nifty, and has been for some.
Well, yes, Kush, there's a surprise coming in. This is Sharad Dubey joining in. And of course, I would like to add a little bit of Hindi to it, to the English as well. Lal Zada, Hara Kam. And that's the situation happening. And of course, it's looking a bit boring.
Yeah.
Let's be honest. 2 days, we are going to see a range-bound market movement happening. But in this case also, we have got exclusive guests like Kush actually pointing out which would be the technical picks going ahead. Kush, the market seems a bit range-bound. Hi, this is Sharad here. What are your technical picks?
Sharad, you don't need to introduce yourself twice to me. I am so excited for this conversation. It is so good to share screen with you after a while, and I'm actually looking forward to more such interesting and engaging conversations. अब तुमने शुरू कर ही दिया, थोड़ा हिंदी हम भी जोड़ देते हैं. I think मार्केट में जो ये दौर चल रहा है, ये बड़ा हेल्दी सा है मेरे हिसाब से. इसे थोड़ा सा बाइंग के तौर पे लेना चाहिए. बट जैसे हम दिवाली की सफाई करते हैं, इसको पोर्टफोलियो को भी दिवाली क्लीनिंग के लिए यूज करें. जो स्टॉक्स नहीं चल रहे हैं उनको बिल्कुल आप दरकिनार करें, उनको अपने पोर्टफोलियो से हटा फेंकें, ताकि नए स्टॉक्स और नई चीजों के लिए जगह बने.
So Kush, what would you advise investors then? Which would your stock picks be? I mean, Diwali cleaning तो हो गई, but
कब से हो रही है?
Exactly.
दिवाली पिक भी दे दीजिए. Yes.
So what should be the new charm that should be added in your portfolio?
देखो, दिवाली पिक तो हम दिवाली पे ही देंगे, so viewers उसके लिए जरा तैनात रहें. But for today, I've got a mix of a long and a short. GRM Overseas, this is one stock that we've discussed in the past as well, has done well. Mild profit booking, but now you're seeing a crossover of the 20 and the 50-day moving average. Volumes are also fairly healthy. And the fact that stock is gaining ground in a weak market like this is still a very healthy sign. So I would suggest a buy on GRM Overseas for targets of 408 and 415 and 393. That's your stop loss. On the short side, I've got IEX. Mind you, these are calls that we've initiated on our advisory as well. So the targets and stop losses are for a day prior. So yes, the target on IEX on the downside is 135, 132, and the stop loss is at 140. Since it is very close to the first target, my suggestion would be to lower the stop loss from 140 to 138 and hold for the second target of 130.
Okay, Kush, stay with us, and I will take a question with you on Gail as well. But what reports are indicating right now is that PNGRB is right now raising doubts on Gail's rationale and the process when it comes to fixing tariffs. In fact, the context to this is that Gail had a proposal to up the pipeline tariff before PNGRB since August 2024. Now, some of the PNGRB members are objecting to Gail's plan to up the pipeline tariff. That is what we've been picking up right now. And in fact, they had submitted a proposal to the Petroleum and Natural Gas Regulatory Board, that is PNGRB, in August 2024 to increase the integrated tariffs for its pipeline network from 58.61 to almost 78 rupees per million British thermal units, that is MMBTU. And the PNGRB was expected to deliver a tariff order by the first quarter of FY26. But now there is a question mark that PNGRB has raised, and in terms of the method that they are doing it, on the back of which you're seeing a sharp correction that's coming in on the counter. Gail at the day's lowest levels with cuts of 3% coming in there. What are you looking at, Kush, in terms of when a Gail is concerned? And today, in fact, CLSA came out with an interesting note when it comes to the overall OMC segment. Gail wasn't a part of that note. They spoke about all the others from a HPCL, BPCL to an ONGC as well. But now that the pressure is built in today's session, what would you advise investors to do?
I'd invest, or rather I'd suggest investors to stay out of this, and for a very simple reason. I've maintained this a couple of times on the channel before. I prefer to trade in stocks I can invest in. I don't think Gail is a stock that I would ever invest in, or I don't see myself doing that in the near future. We did have some sort of momentum building up. There was definitely an attempt to cross a 200-day moving average. There was a falling trendline resistance of the last 6 months that was being taken out yesterday, but lasted just for a day. And today the stock is back, lower levels on the back of rising volumes. So my suggestion, you could have some exposure to these stocks, in terms of a trading bet on very small quantities, but overall, these are not very big positional bets that I would take. As far as Gail's levels go, from an immediate perspective, there is a very clear support at the 170 mark. So as long as that is held, perhaps the stock would consolidate, go sideways. But like I said, I wouldn't really be very keen on taking positional trades on Gail.
Well, yes, of course, be very specific when it comes to the positional trades when it comes to Gail. And of course, we see a lot of trends changing in the OMC counters as well as the oil and gas counters, as we see the stock cracking almost more than 3% in the day's trade. Now, moving on to our special segment. On our stock of the day segment today, we have Anand Rathi in focus. The company released their Q2 earnings with the revenue up more than 8%. Vansh joins us with all the details.
So thank you for that, Sharad. So let me firstly start off with the Q2 results. Now, there are a strong set of numbers from the company. In fact, they have achieved their 50% of the revenue guidance for FY26 as well. Also, the company is well positioned to achieve the AUM guidance of 1 lakh crore by FY26 as well. Now, if we look at the Q2 results, now we have seen a revenue that is up by 23%. We have seen a EBITDA that is up by 32%, and the PAT and we have seen an uptick of about 32% on the PAT as well. Now, moving on to the AUM trajectory for the company. We have seen the AUM rising from 75,000 odd crores in Q2 FY25 to 91,500 odd crores in Q2 FY26 as well. Also, if we talk about the AUM mix for Q2 FY26, we saw equity mutual funds contributing to 53% of the revenue, debt mutual funds are contributing to 5% of the AUM, and the non-principal structured products and other segments accounted for about 40% of the AUM as well. It's also important to note that the company has already achieved a 50% guidance of FY26, and the client arbitration remained low at 0.18% as well. Lastly, if we look at the full year guidance for FY26, they are guiding for a revenue of about 1175 odd crores versus 980 odd crores in FY25. They are guiding for a PAT of about 375 odd crores versus 300 crores in FY25, and they are guiding for an AUM of 1 lakh crore versus 91,500 crores in Q2 FY26 as well. Lastly, if we look at the valuations, we see that the Anand Rathi is trading at a PE of about 56.93. If we look at the 1 year forward PE, slightly premium in compared to the Prudent Corp and Nuvama Wealth as well. So this is how the overall picture is panning out for Anand Rathi as well.
Well, thank you very much, Vansh, for giving us an entire update on Anand Rathi's earnings. But to take this conversation forward, we are having joint CEO of Anand Rathi, Feroz Aziz, on how he looks at the margins and what's his guidance going forward. Listen in.
We have penetrated 52% on PAT and 50% on revenue, a little over 50%. But do we revise the guidance? No, because we have been always taught to undercommit, over-deliver. And I think half year is not good enough proxy for us to understand the full year. So we'll maintain the 375 crore PAT number and 1,175 crore revenue number and 1 lakh crore of AUM mark. AUM in Anand Rathi is counted very, very microscopically and not inflated. So that's, we are at 91,568. The odds of this happening has gone up substantively. And sustenance, when it comes to sustenance, we have been indicating a 20-25% growth for a decade at least.
Well, yes, that is the ever-charming Feroz Aziz giving his views on the company itself. But Kush, you are also a charming person. What is the important technical levels looking like when it comes to Anand Rathi? Or is there any other stock also which you are looking at in this space, especially on the wealth creation side? A lot of buzz is there, and they are actually, you could say, insulated from the F&O issues which actually keep cropping in time and again. But let's look at this wealth management space itself, and of course we'll start with your view on Anand Rathi. How does it look in the charts?
Yeah, well, you're adding a lot of color, not just to the market commentary, to our interactions as well. And thanks for that charming comment. I think it takes one to know one. As far as the Anand Rathi stock goes, the stock actually done well. The breakout was a long Q1. There was a bit of consolidation with the positive bias in the last 10 odd sessions that was happening. Now the moves come about, buy on rumor, sell on news. In fact, today, if you see 3,300, was the high that the stock made. It's already seeing some profit booking from there on. Now you want to wait up a little. Let the stock slip, maybe some more profit booking around the 3,075 mark. Around that zone, you want to start accumulating that. So the momentum play is done. And as you rightly said, a lot of other peers are starting to do well. And incidentally, I like both of them. And Nuvama also has had a good run and trading above the resistance levels of 7,000. And likewise for 361. Here too, you had a triple top formation of 1100, and that resistance is taken out today. So yes, I would be keen on Nuvama and 361. Anand Rathi, I might just wait up a little around the 3075 mark is where you look to accumulate. And if you're looking at capital marketplace, I think these are stocks that you want to still be in as long as the expiry, the weekly expiry news is not cleared up. You want to perhaps steer clear of pure broking or largely broking dominated players.
That's with regards to where these capital market stocks are concerned, and 361 VAM is something that Kush is looking at. Wait for a while for Anand Rathi is his view. But with that, it's time to slip into a very short break. We'll be right back on the other side. Do stay tuned.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Meeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में profit लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting.
Welcome back to India Market Close. In fact, shifting focus to the EMS space. Q2 earnings about to kickstart, and you have Prabhudas Leeladhar Capital, that's PL Capital, who's released a report outlining their expectations for the quarter, along with their top stock picks in the sector. But before we bring in Praveen Sahai from PL Capital, let's go across to my colleague Puneet for the top 5 factors to watch out for in the EMS space. Puneet, over to you.
Well, thank you for that. It's expected to be a strong quarter for all the EMS companies that will be led by strong revenue growth. So you would be seeing some companies like Keynes Tech, which have guided for over 60% growth on a full year basis, will see 50% growth in revenue in quarter 2 of FY26, and those that is expected to be one of the key stocks to watch in the EMS space for this quarter. Apart from that as well, we are seeing companies like Sirma as well as Avalon Tech showing a decent growth in terms of revenue, and that is led by a lot of their ventures which they've done in the past. For Sirma, they are continuously reducing their share in the consumer space, which is the low margin business. So you are expected to see a good margin profile of over 8 to 9% for the companies. Finally, what we'll be watching out for is the strong build up in order books across segments like automotive, like industrial, amongst others, and you will see that translating across a bunch of players, and it is expected that the market opportunity will increase. So you have seen the GST rate cut benefits. What could be the quantum for some of the players who operate in the room air conditioner space, in the electronic space, will be something to watch out for.
Okay, thank you so much for that, Puneet. In fact, Praveen Sahai joins in. Praveen, welcome to the show. From what is expected so far as well, a strong quarter is what you are expecting. What are the key factors that you are watching out for that will lead to this kind of strength?
Yeah, hi, good afternoon. So this quarter, again, the companies are looking to report a very strong numbers like of Keynes nearly around 57% of a growth, or a Sirma or Avalon also in the range of around 30% of a growth. So that growth is mainly from the auto industrial segment, and they are largely the PCB assembler. So they are getting a lot of order book from these two segments, and that's the driving the growth. Even the full year guidance for these companies are even a better, because second half usually a better quarters for them as well. Second thing is also on the margin front, because if I look at on the margin industry wise, when these companies go to the auto to industrial, the margin profile changes. Like auto, they used to generate a high single digit, and the industrial 15 to 20%. And that's why their major order book is coming from there. And that's why the margin improvement is also on the card. And that's the reason the profitability growth, what we are looking at is in the range of around 40 to 50% for the companies. So definitely for the full year as well as for a quarter, it's expected to be a very strong quarter.
Praveen, with regards to where order book is concerned, where are you seeing a strong visibility? Which are the segments do you think going forward will have a strong presence in terms of order book?
Yeah, so in terms of the order book, all the different PCB players have a different order book scenario in terms of the sector. If I talk on the Keynes, like auto and the industrial is a strong order book they are getting in, and especially in the industrial, the smart meter space, they had a forward integrated as well, and now they have a good strong order book, and that is going to drive for this year. Next year there are three major EV players are become the client for them, so that's the another order book they are driving. Now they have around more than 7,000 odd crore of order book, so that is executable over 12 to 18 months. So that's the two segments where they are more focused on. The way forward as well for them from Q4, the offset number will also start kicking with an operation of their facility. And the next year, the PCB manufacturing will also come in. So all together, 3-4 segments together, if I look at the Keynes is a very sweet spot for the next couple of years to deliver around 50 to 60% of a growth. Similarly, if I look at on the Sirma as well, that's expectation for the quarter is around 30%. Their consumer segment contribution is reducing. So this quarter, again, if I look at for the Sirma prospects, they are getting a good revenue from their the two major segments, which is, and again, the industrial and the automobile. They are also receiving, and the way forward, the second half would be largely the IT order book is in the place. So we will see there is a improvement in the margin as well for them as the consumer is going down, and order book from three major sectors are very strong for them. So they are also expected to deliver more than 30% of a growth in their top line, and with the improvement in the margin, the profitability in the range of around 35 to 40%.
Well, hi, good afternoon, Praveen. Sharad here. Just trying to play devil's advocate here. Of course, you have spoken about the margins on the order books, but there are certain concerns also in the industry. If these high growth levels are actually not maintained, these are high beta stocks, we might see some corrections also. Just trying to ask, what would be the concerns if there would be any delay in orders or cash flow generations might be delayed? So there are certain concerns also. If you could just point out what are the concerns would be there during this earnings season.
Yeah, so the one of the major concern is as they move towards an auto or industrial segment, their working capital getting stretched. So that is the one of the major concern for these companies, because if I look at the working capital days for the Keynes is more than 100 days. Sirma is also nearly around 60-70 days. Avalon 150 days. Scient is also in the range of around 150-160 days. That's one of the big concern for these companies. And if there is any delay in the execution of any of the major order, definitely we will see the guidance of a 50 or 50 to 60% of a growth for the Keynes, or more than a 30-35% in the Sirma. If there is a miss, definitely they are at a very high valuation. The entire sector, if I look at and take the FY18, that's the entire sector, and the market coverage is trading at around 37-38 times on the PE basis, or on the 27 it's trading at around 47 to 48 times. So that's a PE is on the very high side. So if there is any miss in the order execution, definitely there is a room for a correction, as well as the working capital, stretch working capital. That is the another concerns what I look at for the industry.
Praveen, what about your top picks in this space, considering valuations not cheap for any of these counters?
Yeah, right. So that's a very difficult question to answer actually. But on the the order book size or the diversification in the business, we like Keynes, even though that's on the valuation side, it's on the trading quite a higher as compared to the peers, 65 times 27 or 51 times 28. But if someone is looking for the next 2 to 3 years, they are creating like a PCB manufacturing, as well as the offset facility is going to up and running by fourth quarter of this year. That is another growth lever for them, and the very strong order book they have. And also the diversified towards an auto, industrial, the medical. So everywhere they are, going in. So I like Keynes out of this PCB assembler, even though that's Amber is also looking at this price is a good, because they are the largest in terms of the RAC contract manufacturing, but their electronic segment with the 3 or 4 acquisitions which they had done in the recent past is going to give them a good growth in the EMS business, 35-36% of a growth. So I think way forward, and that's the valuation is also in my numbers on Amber is trading at 34 times, is a quite comforting as compared to the peer set. So another name is an Amber and the Keynes, which 2 names which I am liking.
Amber and Keynes technology is what Praveen is liking in the EMS space. With that, Praveen, thank you so much for taking out the time and, of course, giving us all those insights about the EMS space. Kush, I'll quickly come to you on these EMS counters. Anything that's attractive on the charts right now?
I think an Amber still is, and I mean that as a relative picture compared to whatever the rest of the pack is doing, because most of the stocks are either in a sharp round of profit booking or, in a downturn. Amber, on the other hand, is consolidating, with low volumes, holding on to key support zones of 8,000, 8,050. So if at all one were to pick, I would pick Amber with a stop loss around the 8,050 mark. And on the upside, you've got targets of 8,400 and 8,600, that could be achieved in the next couple of months.
Well, thank you very much, Kush, for giving your updates on the EMS picks as well. Now let's take a quick break. Stay tuned to NDTV Profit for more news on the other side.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital.
Welcome back to India Market Close. Let's quickly put up Nifty 50 and Bank Nifty on the screens and see what's happening there, because we were at the day's lowest levels. There's mild recovery that has come in on Nifty 50 as well, but still cuts of 0.3% continues. Let's look at the PSU Bank Index as well as the Bank Nifty as well. Similar kind of recovery coming in on Bank Nifty as well. And if we can have the PSU Bank Index on the screens, that continues to trade under pressure. Now, staying with the IPO space, you have one company which we're going to talk about right now is a Midwest. Now, this company is engaged in the business of exploration mining of natural stones, and they produce wide range of granites like Black Galaxy, Absolute Black, as well as Tan Brown. They are operating around 16 granite mines across 6 locations in Telangana and Andhra Pradesh. Their IPO opens tomorrow and closes on the 17th, and the issue size is around 451 odd crores, out of which 250 is a fresh issue and another 200 odd crores is the offer for sale. Price band is around 1014 to 1065. Joining us on the show, we have Ramachandra Kollareddy, promoter and CEO at Midwest, and Uma Kollareddy, promoter and director at Midwest. Welcome to the show. My first question coming to you, Ramachandra, is firstly, in terms of where the IPO goes, what is the thought process with regards to, coming up with an IPO listing, and then you're talking of a fresh issue, which is around 250 odd crores, so the usage of funds as well?
Yeah. Thank you for having us. So at Midwest, we are a natural stone company and diversifying into quartz and heavy mineral sands, which are feedstock for titanium and rare earths. In terms of the 250 crores, that is the fresh issue, 120 crores is going towards the expansion of the quartz plant, which is driving the engineered stone and solar glass supply chain. And the rest is going towards the EV, electrifying our fleet, then solar, captive solar, and some repayment of debt.
Well, yes. Hi, Uma. The question remains is for your business, if you could just give us a detailed revenue breakdown of which categories are actually working on, so that we get a perspective of which industries is actually the company catering to. If you could just give us some color to it.
Sure. First vertical of the business is the natural stone business, and we are India's largest exporter with a 64% market share and a 27% EBITDA margin edge. This is for the black granite variety. Now, we've commenced our phase 1 quartz processing plant. And this is focused on 2 verticals, the engineered stone, raw material for engineered stone, and for solar glass industry. And this phase 1, phase 2 also, we are doubling the capacity. From phase 2, we are going to double the capacity for these 2 industries from the objects of the issue. And the margin profile, you would see it, is very encouraging. If you look at our competitors' margin profile, like a Sibelco, it looks at, it's quite encouraging. And the third vertical we have is the heavy mineral sands. These are the raw material feedstock required for the titanium value chain for the downstream industries, and also a byproduct which is monazite, which is again required for, you can make rare earth oxides, and it's required for the for driving the EV industries, for driving defense and the renewable industry. So this, again, it's very encouraging on the margin profile, given that they are listed players across the globe, like MP Materials, which is into rare earth oxides, and Iluka, which is again mining and processing of the heavy mineral sands, wherein the EBITDA margins are more than 40%.
Okay. Ramachandra, hi. Mahima also joining the conversation. Just wanted to get a sense of your financials as well. I was just seeing as to how your EBITDA has grown from a 90 crore in 2023 to almost 171 crore, nearly doubled in 2025. Margins have significantly improved, which Uma was also, referring to, that margins are best, as compared to the entire industry. Just want to get a sense, because from a 17% to a 27%, what has led to that growth? One thing, and is that sustainable is my next question. Even in terms of profit, it's almost grown threefold. So just want to get a sense of the entire financial picture.
Yeah, post-COVID, there was a big drive from the company's point of view on the energy side. Energy is our number one cost. We have electrified most of our fleet. We are in the journey, and we are converting to backward integrated to solar. So that is one driving force. The second driving force also has been new markets opening up, and the dollar has helped a bit. And domestically also we're seeing high growth, wherein the products which you see for the smaller blocks, which go for tiles, domestically, the overall affordability in India is increasing, where you're seeing a shift from ceramic industry to natural stone industry, and black granite is the most coveted natural stone in the spectrum, and we are blessed with domestic resources. So I think these are primarily the driving points, and going forward, India growth is going to continue. Our endeavor to reduce cost on energy side is continuing. We have a good pipeline. Out of the proceeds of the fund, considerable funds are going toward in that direction, and we are striving to have similar margin profiles.
Sorry, Uma, you talked about a bit about rare earth as well, because it's been the talk of the town since the past couple of months. Just want to get a sense as to what is the kind of prospects going forward for rare earth metals, and what is it that you as a company are doing to boost mining in that particular segment.
So we entered rare earth much before all this buzz started, with more than 18 months ago, and we applied for licenses in heavy mineral sands. And we are working in that direction for a while now. And suddenly the world wants an alternate supply chain from China. They're looking for an alternate supply chain. And the rare earths, we make rare, the idea is that the downstream of rare earth is from monazite. You make rare earth oxides, which go into permanent magnets, which go into the motors, which drive the EV sector, they drive the renewable sector, and they drive the medical equipment and defense sector, like the MRI machines. You need 1.5 ton magnets in each of these. So given that, for our licenses where we are mining heavy mineral sands, which are actually the feedstock for titanium, so the ilmenite and the rutile which come out of the heavy mineral sand concentrate, those are used to make the downstream industries for titanium slag, which go into titanium metals and titanium dioxide for lightweighting of metals. A byproduct that comes out is the monazite, and the monazite is again the downstream for rare earth elements. So we are in that direction, and the recent developments, with the world aggressively looking for an alternate supply chain, US has given support pricing, minimum support pricing of $120 to MP Materials, which is a non-Chinese source for rare earth oxides, whereas the Chinese index is priced at $60. So that's the kind of need the world is looking for, and especially in India, for the downstream industry to develop, we want to ensure that the raw material supply security exists, and we are striving towards supplying the raw material to India for driving the downstream industries.
Well, yes, Ramachandra, I just have one more concern. This is a concern regarding the dependence in the entire rare earth system, or if your titanium system, if you have been explaining us all this time, what is the level of dependence coming in from non-India markets, and by chance any supply chain issues happen, will it impact your business?
Right. So we are blessed with a resource. We are sitting on a resource base which is outside the China spectrum. We have our own licenses as we speak, which means we are able to privately develop and position to whichever market we want to cater to. And our endeavor when we started this project was for the supply security of India. And as far as India is concerned, we are solving that. We are trying to be part of that puzzle. Obviously, the rest of the world is chasing similar resources. So given that there is a lot of traction, and as a company, our direction will be, yes, balance sheet is a focus, but I think in terms of strategic growth and positioning, we will be India centric, and we don't find being India centric, we are having a lot of advantages rather than concerns right now.
Okay, all right. So that's with regards to where Midwest is concerned, and of course, Ramachandra and Uma, thank you so much for taking out the time and speaking with us, and all the very best for the IPO. For viewers' perspective, it starts from 15th of October and ends of 17th of October. It's a fresh issue of 250 crore. Overall, it's a 451 crore IPO that Midwest is looking for. But with that, it's time to slip into a very short break. But we'll be right back on the other side with Aditya Shah joining us to talk about all the buzzing stocks in the trade. So stay tuned.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct.
India market close. Now let's also get an Aditya Shah of Hercules Advisors. Aditya, welcome to the show. Always a pleasure to speak to you. Seeing the way the markets are panning out at this hour, last two trading sessions, an absolute downer. I mean, you are seeing profit booking. There are some bouts that you see where stock movements happening, but that's very individualistic. I mean, there is no particular trend that we are picking up so far as well. Taking a week just before Diwali, what would you advise investors to then watch out for?
From my perspective, I am always positive on the market. HCL Tech as well as TCS because from my perspective were not negative at all. In fact, they were positive according to me. So from my perspective, IT companies where valuations look attractive are really very interesting. For example, companies like TCS or even NCL Tech look really very interesting, where over the period of last 1 or 2 years, those stocks have taken a real beating and the valuation is starting to look better and better. So from my perspective, forget about this Diwali, invest for the next 5, 6, 7 years, 10 years, and you will find a lot of opportunities now in the market. For example, the IT sector is presenting a good opportunity. The chemical sector is offering a great opportunity with stocks time correcting and price correcting for the next 2 to 3 years. So a lot of opportunity in the market. You have to be stock specific, as the market itself is not cheap. Stock specific action is there, and you have to be really very patient for the market to give you any return over the next 3 to 5 years.
Okay, so that's with regards to overall market view. Let's quickly also address a few of the top buzzing counters in trade today. MTAR Technologies. It's very interesting because recently they did get an order win from the Adani Group as well. Stock trading at almost 13 times its 20-day average. The margins are expected to be stable is what the company has indicated, and they're expecting revenue growth of 80% from the aerospace and defense sector in FY26. Smart moves coming in today's session. Let's just pull up a 5-day chart of MTAR as well, and that will tell you the kind of growth story that probably is intact on the charts. 12% up move today. In the last 1 week, there you go, that spike actually coming in in today's session. Websol Energy System as well, strong moves coming in, 6 times 20-day average is the kind of volumes that you're seeing on a Websol Energy. Now, the current installed capacity for them is around 475 gigawatts versus an estimated 2,100 gigawatt in 2047. They're aiming 500 gigawatt of non-fossil fuel energy capacity by FY30. The stock at the day's highs. And a Powermare projects, again, volumes are pretty strong. The order inflow as on the first quarter stands at around 1,270 odd crores, and they're expecting a revenue guidance of around 6,500 crores, which is almost a 25% year-on-year growth. That stock also seeing gains of around 5% in trade. Kush, anything that you like from a MTAR, Repsol or a Powermec projects?
Yeah, so the couple of stocks that I like are, first is Powermec. Let's begin with that. It's had a brief round of profit booking over the last 3.5-4 months. 200-day moving average support kicking in. Today is the first day of any meaningful kind of a rebound with higher than usual volumes. So yes, this offers a good risk reward ratio, having paid its dues, corrected, and now starting to see a revival on the upside. So from a positional standpoint, 2650, the recent swing low, that becomes your stop loss, and on the upside you could hold for targets of 2950 and about 3100. So yes, Powermec very interesting. Websol also, but this is an outlier kind of a move that you're seeing today. So I would wait and watch. And MTAR, it's risen about 50% in a little over a month's time. So not a bad idea to perhaps book 50% and then hold rest of the quantity. So I wouldn't enter fresh in MTAR, perhaps book partial profits.
Okay, all right. So that's the technical view with regards to these counters. But, the other counter that has remained in focus today is Natco Pharma, because the apex court of the country will hear Roche's plea against Natco Pharma this week, and the stock is already down as we speak, around 3% in trade. To give us more details as to what's causing that kind of pressure on the counter, Varsha joins us with more details. Varsha?
Yeah, well, thank you so much for that. So, case is urgently listed on Thursday or Friday. Now, Supreme Court will hear Roche's plea against Natco Pharma. Now, why this is important, just to give a little background, if you see, Roche make a product which is used to treat spinal muscular atrophy, and Natco Pharma was planning to make a generic version of that, to which High Court had allowed Natco Pharma to launch the generic version, because Natco Pharma was launching that product at a very affordable price. But Roche actually sued Natco Pharma for patent infringement, and this is but despite that, High Court did allow Natco Pharma to launch the product. But now Roche has gone to Supreme Court against Natco Pharma, for which the hearing is expected on Thursday or Friday. So basically, if Supreme Court denies the launching of the generic version to Natco Pharma, the stock that will be a negative for Natco Pharma. So overall, this is the reason why you're seeing Natco Pharma is under pressure, because now Roche has gone to Supreme Court against Natco Pharma.
Okay, Varsha, thank you so much for bringing us those details. Aditya, I'll come to you on this one. Earlier when we were speaking to an analyst, he said that it's most likely that Supreme Court will probably uphold the kind of decision that the High Court has made. But what's your reading here? And of course, anything in the pharma space that you're liking right now apart from Natco Pharma?
So that's the business model of Natco Pharma. They tend to go and try to develop some generic products out of the patented products, and then there's litigation and the settlement of litigation. So that's the whole business model that Natco Pharma really works with. Over a period of last 3 to 5 years, Natco Pharma has tended to disappoint. Their acquisitions have not played out, and the oncology drugs in the US, they have not done too well. From my perspective, I tend to not invest in Natco Pharma at this stage. I would look at companies like Doris Labs or Divi's Labs or Prisma Diagnostics or Syngene, which has corrected a lot over the period of past 2 to 3 years. So CRAMS, CDMO, API space and diagnostic space within the pharma space look really very interesting.
Okay, so that's with regards to where Natco Pharma is concerned. But with that, time slip into a very short break. But on the other side, we will have our bull versus bear segment. So do stay tuned.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money.
Welcome back. You're watching India Market Close here at NDTV Profit, and of course we cannot not address LG Electronics today. I mean, what a bumper listing. Despite of the kind of moves that we've seen on the markets, it still upheld the kinds of gains it got listed with. Around 50-51% is what we saw at which it got listed, and still trading almost 48.5% higher. A lot of brokerages have also come out with their views on the counter and given tall target prices anywhere around that 1800 to 1820 mark. So we'll have to wait for...
Not too far away from there as well.
Not too far away, exactly. And we'll have to see as to what happens tomorrow, because that is going to be interesting. Today we are seeing no sellers in the market, and that is why it's kind of upheld.
And the delivery volumes will be absolutely crucial between the first couple of days to understand what that trend is looking like. In fact, we should take a quick question with our guest as well in terms of what is their view. Aditya, I know you've been absolutely positive when it comes to LG. We did speak once the IPO was open. A listing gain of 50%. Would you advise investors to book profits right now or do what? Stay invested?
Was that question for me?
Yes, Aditya.
Yeah, LG is the market leader in the consumer durable space. It's got market leadership across the fridge, refrigerator, AC, and a whole host of consumer durables. If you look at the profit growth of LG over the period of last 3 years, it has been sub 10%. So from my perspective, a stock that is trading at about 60-65 times multiple, giving us profit growth of 10%, I will wait for a certain amount of correction before entering the stock. However, longer term, the outlook for the company continues to be really very strong. The domestic market growth will be captured by LG. So shorter term, you have to be cautious. Longer term, you can go and invest.
That's with regards to where LG Electronics stands. Kosh, a lot of counters in the broader end of spectrum, that are seeing pressure includes counters like Avalon Tech, Banco Products. There's also Reliance Infra, Jyoti CNC, all down by about 4 to 5% each. Any of these counters where you see that the bottom is found and you can make an entry right now?
So I think the one counter amongst these names, which looks interesting and which could do well going forward, is perhaps Jyoti CNC, because we did see some sort of bottom formation structures in place yesterday and today. You're seeing some sort of profit booking, but I would keep an eye on this one. I wouldn't go out and buy because the recovery attempt has mildly fizzled out. But as long as that 880 support zone is intact, I would extend that to 880, 870 zone. If that is intact, you could see a rebound on this stock. So while I wouldn't suggest a buy on Jyoti CNC just yet, I would suggest this is one you could definitely keep on the radar. And Avalon Tech, having had a very sharp run in the last 2.5 months, is seeing some profit booking. So once this move settles, perhaps close to the 1100 mark, I think this could also turn into a buy.
Okay, all right. So that's with regards to these two counters, Avalon Tech, and the other one was, which one was that, Kush, that you talked about?
Jyoti CNC.
Jyoti CNC. Okay, so these two should be on your radar where technicals are concerned. But viewers, with that, again, a very short break that we'll take, but we'll be right back on the other side. And of course, Kush, thank you so much for joining us on this show and of course giving us those insights.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. And therefore, it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
Welcome back to India Market Close, and now we'll be talking about a very special segment, which is the bulls versus bears, and the stock which we are talking about, which everybody wants to know, that is BSE. Of course, people are asking whether the stock will go up, will go down. So we have actually brought down certain reasons whether it can go up or go down. The bull case scenario, the expiry day change, there's a minimum impact happening on the market share. Now we know about it. Tuesday, Thursday, the interchange has happened. For the last 4 to 6 odd weeks, the customers, the loyal brokers have stayed with BSE as well, and that's what we are seeing in the stock prices as well. Bear case, this is important because the risk of phasing out of weekly options, that is also there, and this is an exclusive coming from NDTV Profit as well. So of course we'll be looking at it. This will take a longer time also, to be honest. So that is something which we'll be looking out for. Let's look at another bull case for BSE where it actually stands. There's an increased broker engagement and new product launches are also there. Brokerage is also bullish, especially the domestic ones when it comes to the bull case for BSE. But if you look at the bear case, the premium turnover, that has hit by the F&O regulations, and to be honest, from December last year itself till now, it's down almost 1/3. So you can see there is a significant erosion in the market activity when it comes to retail as well. Moving on, now let's look at the third bull case which would be in our focus. There will be a combined order book initiatives. Now this, under the new management for the last 2 odd years, we are seeing that new initiatives are coming out, and these combined order book initiatives are actually adding strong yields to BSE's numbers as well, and that's why we are seeing increased numbers in their PAT as well. Bear case, more exchanges might be coming in, and there itself the new asset classes would be coming, which is the non-equity asset classes. Over there itself, there might be more competition as well. Of course, we know the market is in a duopoly currently, but we could see some more exchanges coming in the future as well. Let's lastly point out the fourth bull case. The stock is up 20% from September lows. That means despite a lot of aberrations, or you could say negative news flow coming in for the capital market theme stocks, still the stock is holding up very strong. It's up 20% from September lows. So that is something which you could ponder upon, that investors are sticking by BSE, and of course their lifetime high levels that stood at roughly around 3,000 odd levels. Bear case, lastly, exchange liquidity. They may actually pose a threat, especially post NSE's listing as well. And of course, investors might be moving towards NSE as well. So these are the 4 important cases for BSE which will be in our focus. But Aditya, you have also spoken a lot about the capital market theme stocks. Of course, we can segregate it between F&O and the non-F&O segment, which includes the wealth space as well. What's your take on it? Is it the right time to stay away from this capital market theme stocks, or there can be a value buy or a bargain hunt in this space? Aditya.
Yeah, so you wonderfully summarized the pros and cons of BSE. From my perspective, all these capital market stocks are really very expensive. Now, with Sebi increasingly becoming uncomfortable with weekly option expiry, this is going to be a straightforward hit, not only for BSE but also for NSE. So from my perspective, if one does want to own a capital market theme, I would not go to a BSE, NSE or any broker per se. Asset management companies are the ones where you could look at. You could look at a Nippon AMC, or for that matter, you could look at an HDFC AMC. That looks really very interesting. From a BSE perspective, any fall towards 2000 could be an interesting opportunity to buy. BSE, NSE, both these companies could do really well over a longer period of time, but for a shorter period of time, those stocks do look really very expensive.
So that's a fundamental view with regards to where BSE is concerned, but we're also joined by Aditya Agrawala of Invest for Edu joining us now. Aditya, hi, a very good afternoon to you. Thank you so much for joining. Your view with regards to where charts are concerned for BSE, as Sharad was pointing out, still 20% up from its September lows.
Hi, afternoon, Mahima. Thanks for having the show. My sense is this is one space which you cannot avoid, and you should stay invested. Rather have a basket of stocks which can include exchanges, can include your wealth management companies, can include your infra plays, and the whole host of stock. Talking specifically of BSE, I'm of the opinion one should have the stock in its portfolio. Look at a target of 3,000 and above, and this is something that you should make an investment, not from a trading perspective, but hold at least for a year or so. And you can add another name to it, which is MCX. That also has seen a sharp spike, especially after the surge in gold and silver prices and the kind of activity that we're seeing on MCX. So my sense is both these exchanges, MCX and BSE, should be part of the portfolio, and you should own them, make a part of it, allocate some part of money to it, and hold on to it at least for a year or so, and you will see decent gains in them.
Okay. In fact, Bank of Maharashtra has also posted its Q2 numbers where net profit is up 23%. Gross NPA has seen a slight downtick at 1.72% versus 1.74%. The net NPA is flat at 0.18% QOQ. The net interest income has seen an upside of around 15.7% year-on-year basis. Operating profit has seen a growth of around 17%, and overall provisions is down by about 13% QOQ and 8% around YOY basis. Atisha, I'll come to you quickly on this one. If you've had the chance to look at the numbers, any view on Bank of Maharashtra?
I have not had the chance to look at the numbers. However, within the PSU pack, SBI clearly continues to be my favorite. SBI's sheer market share and the size of SBI would mean that the bank will continue to do well over the period of next 5-7 years. On the smaller banks, I've not been able to look at Bank of Maharashtra's number per se, but on the smaller banks, I will then go for Canara Bank or for that matter, Union Bank as well, and not look at Bank of Maharashtra.
Bank of Maharashtra, you're talking about Canara, Union, the entire pack. Let's pull up a Navkar Corp. A small, company in terms of the profitability, but the spike is pretty strong, 6% uptick coming in. Margins have improved substantially for a Navkar Corp at 15% versus 12.9% that was reported same quarter last year. If you see in terms of the profits as well, the company's posted a profit of around 4.4 crores versus a loss of around 2.3 crores. So a good number coming in there, a 20% uptick coming in terms of the top line as well. In terms of the charts, let me ask this question to Aditya Agarwala. Aditya, I mean, a spike coming in terms of today's session on the back of a strong set of numbers that have been reported. But are you expecting this uptick to continue? Are charts supportive of this momentum today?
Afternoon, Hiral. My sense is I'll still wait it out. 132, 133 is a hurdle for the stock. Stock hasn't been able to take that out, though volumes are backing the up move, which we witnessed in trade today. I would wait for this breakout above 132, 133 odd levels. If that happens, then yes, I would be a buyer in the stock. Look for a target of 160 to about 170 on the upside. That is the kind of upside that I see then, with a stop loss at 120 on the downside.
So that's with regards to a Navkar Corp. And in fact, last year, in all the 4 quarters, they had incurred losses, and this is the quarter where they've turned profitable again, and probably that's what is something that the street is liking right now. Aditya Agarwala, what about your view on the indices? 2 straight days of red is what we have seen. We are now below the 25,200 levels as well. Do you think the 25,100 is where we'll sustain, or is there a further downside or a further uptick? What are you seeing on the charts?
I don't see too much of a downside from here. My sense is rather this is more of an expiry move that we are witnessing in trade today. 25,200 will be difficult to take out in last half an hour of trade. But come tomorrow and till the more trading session, my sense is market should remain buoyant, and there are high chances market will break out of this resistance zone of 25,400 on the upside and should test levels of 25,650 to about 700 by the time you hit more trading session. And if I talk about banking index as well, that also is looking quite interesting. In fact, yesterday we saw an outperformance from the bank Nifty. Today also it's outperforming. My sense is you will see much higher levels on the bank Nifty as well, beyond 57,000 in a week or so. So both the indices, Nifty, bank Nifty, I'm quite bullish on. And today's move is more of an expiry move that we're witnessing, the weekly expiry move. Come tomorrow, my sense is you will see higher ticks on the Nifty and the bank Nifty both.
And what about your picks for the day? What would you go ahead and buy?
So I've got a couple of buy recommendations. The first one is Tata Communications. Stock has been showing enormous strength in yesterday's trading session and today's trading session as well. So at current levels, I'll be a buyer in the stock for a target of 2050 with a stop loss at 1780 on the downside. The second stock is Max Health. This is also quite interesting and has been making higher highs, higher lows. It's a one-way up move for the stock, and the up move is likely to continue in the coming trading sessions as well. So for a target of 1210 on the upside, I'll be a buyer with a stop loss at 1135 on the downside.
Well, important picks coming in from Aditya, and of course, buy rating coming in for Max Healthcare, target price of 12.10, stop loss of 11.35. But small cap space is abuzz. What are the stocks on the radar? Varsha is here to get us all the details.
Well, you know, the first one is really interesting one, that is Prudent Pharmaceuticals, wherein they're going to launch, they have launched Jain biscuits for dogs, and they're moving from OEM to branded products for the higher margin. And the next leg of growth for the company will be pet food, nutraceuticals. Next on the list is Aventil, wherein the downward momentum continues for the third consecutive day. Over the 6 months, if you see, the stock is up 64%. Order book as of today stands at around 210 crore. Then we have Atlanta Electricals, wherein if you see, the volumes are trading at 0.3x of its 38 average. Company got listed on September 2025, and the order book for the company stands at around 1,600 odd crore. Last on the list is Utkarsh Small Finance Bank, wherein we have seen a heavy action today on the back of X rights date. And if you see, board has approved a right issue on October 8th, 2025. So these are all the stocks which are buzzing as of today.
Thanks a lot to Varsha, picking out important stocks in the small cap space. But of course, we will be actually asking questions to our guests from this list as well. But let's just mention that importantly, AkzoNobel is in focus. And of course, the open offer details are actually out for JSW Paints. JSW Paints has announced an open offer to acquire up to 1.2 crore shares at around 3,232 rupees per share. Now, this is an open offer coming in where they will be acquiring another 26% stake, and the total amount would be roughly translating to almost 3,000 odd crore rupees. And of course, the fundamental analyst has stated that there might be some more value unlocking coming in AkzoNobel as well. Aditya, from the funda perspective, could you just actually point out for the AkzoNobel itself, what do you think would be the important triggers, especially in the paint industry as well? So what would be the important thing for the stock as well?
The paint industry has become highly competitive. As we've seen, Asian Paints also really struggling to get in volume growth. JSW Paint has been really very aggressive in their marketing, and I think the acquisition of AkzoNobel will be positive for both AkzoNobel as well as JSW Paints. It will let them get a lot of dealership touch points, and the ramp up of JSW Paints would be faster than expected. So from my perspective, this is a stock that I'm closely watching out as to how the ramp up will happen over the next 6 to 12 months. And as well as I'm looking at Asian Paints, a lot of valuation derating has happened on Asian Paints, and this will continue to happen as the competitive intensity ramps up. So it's an interesting space, though expensive right now, but it's a space that one needs to watch out for.
But Aditya, since the open offer is for small shareholders, it's still at a discount of around almost 4%. Do you think that this kind of open offer will get subscribed fully?
That is an interesting question. If I were a shareholder of AkzoNobel, I would not give in my shares, and I would want to stay invested in the company to see how JSW Paints does really ramp up the business per se. So from my perspective, the open offer does at a discount. This incentivizes foreign investors to go and give away their shares. If I were an investor in the company, I would not give away my shares.
Okay, so that's with regards to AkzoNobel. Very quickly, if you have to look at paint companies as well ahead of the festive season, Aditya Agarwal, I would take this question with you. Are you seeing any momentum? And we just, one is the festive season. Two, the way paint companies have moved so far as well. Anything that looks interesting on the charts?
Here, the only stock that stands out for me within the paint industry is Berger Paints, and apart from that, none of these stocks have actually been able to deliver any decent gains. In fact, for that matter, even Berger Paint hasn't done much. But overall, looking at the chart setup, this is one stock that I would definitely look at for a target of 600 on the upside. It will take some time for the stock to go there. On the downside, 520 is a good support. So maybe with a stop loss somewhere around 520 and look for a target of 600 on Berger Paint. This is one stock that I would add in my portfolio. There's no trading angle in any of these stocks because they are very sideways, both Asian Paints and Berger Paints.
Varsha was addressing some small cap buzzers earlier. Wanted to know your view on Prudent Pharmaceuticals. I think the internet is kind of amused by the fact that they are actually, introducing Jain Dog biscuits, am I correct?
Yes.
Dog biscuits. And I think that's enthused the internet overall. So, Aditya Agarwal, I'll take this up with you. Anything on the charts that you're seeing there?
Not really. I have not tracked the stock closely. I haven't taken a look at the charts as well. And I'm not too sure how gung-ho the market will be on introducing of Jen biscuits for pet.
Aditya Shah, anything on this that you would want to say? Because I'm sure you're also pretty much tracking everything that's going on social media with Twitter. Any questions that you've got on Jen dog biscuits? And is this the market? Because overall, if you see from a fundamental perspective, in fact, yesterday, just ahead of this launch, we were just randomly talking and discussing the stock in the newsroom and the way it's moved in terms of financials as well. And there was some bit of interest that they start coming in, and then this announcement comes in. Have you heard of this one, and have you seen any investor participation?
So I don't track this stock, so will not be able to comment on
Would you start tracking it? Is the question
definitely.
now.
Yeah, so definitely, I want to understand what is the niche here and what is the market space here, and if this is a worthwhile move that they have made. So yes, of course, you keep learning in the market and you keep exploring new stocks. So this is one stock definitely that I will watch out for from here on.
Okay, so no comments that we've got so far from a Riddhham Pharma. But apart from that, Avantel is another one which has been buzzing quite a bit. Utkarsh Small Finance Bank. Now, the board has approved a rights issue of 950 crores, as Varsha was mentioning. Overall, that stock seeing cuts of 20%. Aditya Shah, what would you advise investors to do with someone who's holding Utkarsh Small Finance Bank? The rights issue opens on the 24th of October and closes on the 3rd of November, and the pressure has continued. I mean, we're talking of a rights offer at 14 rupees in the ratio of 8:13.
So the damage on Utkarsh Small Finance Bank has already been done over the last 1 year. I think when from the highs of the listing and the IPO, the stock has done nothing practically because the NPAs within the micro lending cycle have really turned up, and that has been devastating for the stock. The stock has lost about 50 to 60% of its value. So from my perspective now, if you were an investor, let's say 1 year ago, and you have sat through the pain in Utkarsh Small Finance Bank, I think that you've got nothing to lose per se. You could stay on. Any new investment is not warranted in the company. A lot of NPA barrage is coming for the company. Investors who have already the stock, they can look to stay invested for a turnaround in the bank. No new investment should be done within the bank.
Okay, so that's with regards to where Utkarsh Small Finance Bank goes. A few of the other names which are actually under pressure today. Bajaj Finance is one of the top losers in today's session. Tata Motors is trading the CV business. If you pull up that one on the screens as well, I mean, that rate needs to adjust, but 399 has been that discovery price as well. Aditya Shah, again, Tata Motors, what would you advise investors to do? And secondly, when it comes to a Bajaj Finance as well, that stock is the top losing counter today. Are you seeing an opportunity to buy then?
Was that for me or?
Aditya Agarwal.
Okay, so let's talk about Bajaj Finance first, Hiral. I think it's an opportunity to buy in a staggered manner, I would say. But you can add some at current levels, and maybe on declines to 980, you can look to add further into Bajaj Finance and give it some time. My sense is for next 6 months to about 1 year, you will see both Bajaj Finance and Bajaj Finserv give you decent returns on the upside, and Bajaj Finance should be part of your portfolio. So these mild corrections that you get in the stock is an opportunity definitely to buy onto them. Talking about Tata Motors, of course, I will have to wait for the prices to adjust here. So today, looking at the charts, I won't be able to comment much because there is a price discovery happening. Once that happens tomorrow and the prices adjust, maybe then I'll be in a better position to comment on Tata Motors chartically.
Okay, so that's with regards to where Tata Motors go, no major moves there. Aditya Shah, let me take a question with you. I mean, landmark cars, smart moves on the back of a strong set of numbers that we've seen. Tata Motors, yes, there is price discovery happening. Vahan data is also, giving out some trend in terms of what the EV space is looking like in the two-wheeler space. Your view?
I would want the GST cuts that are really happening, that have really happened within the auto sector to settle down at least for next 1 or 2 quarters, to definitely then take a call that the auto sector has taken an up cycle. I think the pent up demand through October has been a major driver on all of the auto OEMs reporting a good set of numbers. So from my perspective, I will wait and watch at least for the next 1 or 2 quarters. Now coming to the OEMs, from the OEMs, I feel that Mahindra and Mahindra and their two-wheeler EVs as well as the ICE two-wheelers, I think TVS Motors and Hero Motors, particularly from a valuation perspective, do look good. TVS Motors has done phenomenally well over the last 5 to 7 years and continues to do well with their iQube that has come up. Hero Motor Corp has lost market share. However, the valuation continues to remain really very strong. Now, if we look at Tata Motors, I would tend to say that let Tata Motors settle down over the next 10 to 15 days. Both the stocks, the PV business of Tata Motors as well as the other Tata Motors stocks, let both those stocks settle down, and then you will have a better price discovery, post which you can look to enter the Tata Motors.
Regards to where these auto names are concerned, but on today's profit intelligence segment, we are kind of looking at these jewelry companies and as to how they're down from their 52-week high versus the kind of surge that we've seen in gold prices. Now let's take a look. If you take a look at the 5 big jewelry company names, you have your Titan, Senco Gold, Kalyan Jewellers, Thangamayal as well as PN Gadgil, which have seen a kind of downtick from their 52-week high. Titan down 6%, Senco Gold 56% down from its 52-week high, Kalyan Jewellers down 41%, followed by Thangamayal and PN Gadgil down by 24% and 23% each. In terms of the year-to-date and one-year performance as well, they've not done much per se. Now this as compared to how gold prices have fared in the past 1 year and year to date gold is up 56% and 1 year overall gold has seen an uptick of around 55%. Now why is this happening? Just to give viewers a perspective, average gold price as compared to where Q2 FY25 stood versus Q2 FY26 has seen an uptick of 40%, where it was at around $24.75 per ounce versus that of an average price of $34.56 in Q2 FY26. And because of this, a lot of jewelry companies have seen a top line growth which is largely value growth and not volume growth. In terms of the top line growth for all of these companies, largest in Q2 was by Titan around 19%, Kalyan Jewellers though at 31% but still lower as compared to what they've done earlier. Senco at 6.5%, which clearly was seen in the stock downtick the day it announced its Q2 earnings, Q2 business updates, and PN Gadgil at around 8.6%. And like I said, all of this growth that we are seeing is largely value-driven growth because of rise in gold prices and ticket prices going up rather than a volume growth. Now, what are the other reasons as to why these jewelry stocks are falling? First half of FY26, because of the rise in gold prices, has kind of experienced a volume decline also, in fact. Moving on, they've also kind of made consumer prefer lower caratage jewelry and designs as compared to high carat jewelry. Plus, revenue growth is supported by just higher average ticket prices, largely driven by these higher gold prices. Buyer growth has declined for these jewelry companies in the first half of FY26, and plus unlisted players are leveraging inventory valuation gains, and because of this, competition is intensifying and marketing spends are going up, and that is one of the reasons that's putting pressure on margins as well. Moving on, with regards to where valuations are concerned, of course, none of these companies are actually trading at a lower multiple. Valuations have always been expensive for something like a Titan, trading around 85 times, Kalyan Jewellers trading at 62 times, PN Gadgil trading at 14 times, and Senco Gold at 25 times. Lowest amongst them is PN Gadgil, but still a 14 times P is not cheaper. So considering the kind of downtick, and this is despite the kind of downtick we've seen from its 52-week high. So valuations not cheap for sure. Aditya, I'll quickly come to you. We've discussed about these jewelry companies before also, and we've talked about how valuations are not cheap. But your view, from an investor point of view who's already invested in these companies at that 52-week high levels, what should he or she do?
So imagine a situation where gold undergoes not a price correction but a time correction over a bit of next let's say 1 or 2 years, the revenue growth for most of these companies will vanish because gold prices would have normalized with respect to the previous year quarter. So from my perspective, the underlying theme continues to remain that there's volume degrowth per se for most of these companies. Only a few of these companies are showing some good volume growth. So from my perspective, if I look at Titan is just out of bounds. Titan is a great company, but it is too expensive at this stage to invest in. So investors should wait and watch if there is any correction per se within this space in particularly likes of Titan, or for that matter, Senco Gold has its own corporate governance issues. So Titan continues to be my topic. If there's a correction towards 3,000, that would be a good entry point for Titan. But volume growth continues to remain a concern. If gold undergoes some bit of time correction, revenue growth will vanish for most of these companies.
That's jewelers. But very quickly, Aditya Agarwala, your BTST, STBT call, what would you go for?
So I've got an ICICI GI, that is the one stock which looks interesting to me. Here at current levels, I'll be a buyer in the stock. Look for a target of 1900 on the upside with a stop loss at 1830 on the downside.
So that's ICICI Lombard. The stock is at the day's highest levels. In fact, Tech Mahindra also will be in focus as the company is set to announce its results today. With that, you have a persistent system also that will be in focus, because that's also going to be another company that will be announcing numbers. But Jasmeet joins it with what is expected for a Tech Mahindra. Jasmeet, over to you.
Well, right, thank you for that. So in terms of what to expect from the result would be the CC growth is penciled in 0.5 to 1% of the brokerages. On the other hand, the communication segment is expected to do better compared to the other segments in the sector. While the margin improvement program will be in focus, given the management is planning to reach 15% in margin by FY27, and they have been expanding margin from last 7 quarters, so that's something to watch out for. Now, in terms of number, if you look at the revenue expected to take a uptick by 3%, while the EBIT is expected to rise by 11%. There's expansion of margin by 70 basis points, while net profit is expected to rise by 13%. So all in all, a good set is expected from the company, while margins will still be in focus.
Yes, Tech Mahindra in focus, and of course stock is in the green as well in trading. Aditya Agarwal, in case of IT, let's just put the perspective on IT. HCL Tech and TCS, the numbers were largely in line with what the street was estimating. Quickly, if you could point out if any large cap IT, where the valuations are looking good, it would be good for a positional trade setup, or you are looking anything in the mid cap space?
I do like large cap IT space, Sharad, and I think it's time to build a portfolio around large cap IT space. You can add a name like a TCS, an Infosys, HCL Tech, and Tech Mahindra. In fact, all 4 stocks look interesting to me, and one should add all these stocks during declines in the portfolio. Do a staggered buying approach here, and you won't see any immediate uptick here. It will take about a couple of months for the stocks to settle down and start their up move. But this is the right time to get into IT stocks when everybody is avoiding the stocks. These are the times to look at IT, and they will make a comeback for sure. So all these 4 names, Tech Mahindra, TCS, HCL Tech, and Infosys, they look interesting to me there. If you flip the chart to a monthly time frame, you will notice they're trading at multi-year low or multi-decade year low, the RSI. So that tells you that they're trading at extreme oversold levels, and from these levels you will eventually see an uptick in the coming times.
IT names in the oversold zone, and could see an uptick in the near future is what Aditya Agarwala believes. But with that, to both the Adityas, thank you so much for taking out the time and giving us all those insights. Always a pleasure speaking to both of you. Let's take a quick look as to how the markets are closing today. Well, not on a very good note for sure. The Nifty 50 trading around 0.4, closing around 0.4% lower. Around that 25,124 odd levels. The bank Nifty also has recovered a tad bit from where we started, but still closing around 0.3% lower. Let's try to pull up the Nifty 50 heat map and see as to what are the counters that have actually kind of kept the Nifty in check. It includes your names like Wipro and Tech Mahindra from the IT space, your Max Health and Apollo Hospitals in that pharma and healthcare space. HUL seeing a tad bit of gain of around 0.3%, but Shriram Finance and ICICI Bank, some counters in the green. But the pressure has been there on something like a Dr. Reddy's, BEL, Bajaj Finance, Tata Steel, as well as Trent. Trent has seen a significant amount of pressure in the past 1 year since its inclusion in Nifty, as well as year to date, down by about 1.8%. Let's try to pull up the sectoral heat map and see as to how the sectors have done throughout the day. and it's been a sea of red throughout that board. The PSU banks seeing the most pressure, down by about 1.5%, followed by Nifty Metal down by about 1.16%, and Realty also down by about 1%. Nifty Finance, Nifty Bank, Nifty Auto, did see pressure, but not as much as these counters, down by about 0.3 to 0.4% each. Let's try to pull up the advanced decline ratio and see as to how the broader end look like. And there you go. Like I said at the start of the show, as wide as a crocodile's mouth, around 1,857 odd declines versus that of 541 advances. So more than that 3:1 ratio is where the advanced decline ratio is concerned. The Midcap 150 also under pressure. Let's try to pull that chart up, closing at its day's low point. Yes, down by about 0.8 odd percent. The small cap 250 as well, closing a percent lower, in fact, at its day's low point. In terms of where some specific names are concerned, the BSE 500, if we can try to pull that up, there you go. Some counters like C Infosystems, MCX, SKF, Tata Communications in the broader end of spectrum have done well. C Infosystems up 10%, MCX up 5%, SKF and Tata Communication each seeing gains of about 4.5 to 5 odd percent. But something that's seen profit booking, KIOCL, probably the fourth or the fifth day where it's seeing profit booking. Just Dial also on the back of earnings down 4.6%, Sterlite Tech down 4.6%, followed by ITI, Uno Minda, Vodafone Idea and HLE Glasgow down by about 4% each. Let's try to pull up the factors that you need to watch out for in trade post market hours. Today, the US Fed Chair Powell's speech, of course, will be something that we'll be watching out for. China inflation rate is something that we'll keep an eye on. The SKF India demerger, this is an important development that we'll be tracking. SKF India completed demerger of its industrial business into a new company. SKF India Industrials is what we are looking at. Shareholders to receive one new share of the industrial entity for each share that they hold in SKF India. With regards to some other developments, corporate actions, Infosys will announce dividend of around 11 per share. So that's something to keep your eye on. And shares that will see some anchor lock-in exit includes your Anthem Biosciences around 2% and some other names that flashed on your screen just before that. But the IPO, of course, primary markets have been under action this week as well as last week. Midwest is something that will open tomorrow. We also had a conversation with the management. You can take a look at the entire conversation on our YouTube channels as well. 15th to 17th October is the timeline. Issue is around 451 crore and fresh issue of which is around 250 odd crores. The offer for sale is 201 crore and price band is 1,014 to around 1,065. Lastly, in terms of earnings that will come post market hours today that you need to keep your eye out on includes Persistent Systems, Tech Mahindra and ICICI Lombard, and of course some other names that will post their earnings tomorrow, amongst which the biggest one is Axis Bank, HDB Financials, HDFC AMC, Angel One, KEI India, of course Tata Communication, Oberoi Realty, Delta Corp, and some other names like HDFC Life and IRFC as well, and L&T Finance also. So a lot of banking and financial names to post their earnings tomorrow. So that's something we'll be tracking very closely. But with that, we're completely out of time on this edition of India Market Close. But do stay tuned to NDTV Profit for more news and updates on the other side.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Miraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit. A story of change, a path to renewal, a leader reimagining her nation's future.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. But first up, let's see how the markets have fared today. So benchmark indices pared most of the early morning gains to end in the red, as you can see. While the Nifty has managed to trade above 25,100 level, IT has ended almost flat but with a negative bias. So the 30-pack Sensex has lost over 280 points to settle slight above the 82,000 mark. On the other hand, Max Health, Wipro and Tech Mahindra were the top gainers in the Nifty basket. Dr. Reddy's, BEL and the TCS were among the top losers there. Also, the selling pressure has deepened in the broader markets as well, as they've underperformed the frontline indices. So the small and mid-cap benchmarks have ended with cuts of about 1% each. On the sectoral front, the PSU Bank Index, consumer durables and also the metals have gotten beaten down the most. So the selling pressure was also reflective in the market breadth that ended highly skewed in favor of the bears. Now let's just shift our focus to HCL Tech, which has reported an inline performance for the second quarter, staying largely within the market expectations. So the company announced a $2.5 billion mega deal, marking a strong 42% quarter-on-quarter growth in its total contract value. HCL Tech has revised its lower end of the service revenue guidance, which is now projecting growth between 4 to 5% and is significantly up from the earlier 3 to 5% range. So from both the EBIT and overall revenue guidance, they remain unchanged, reflecting steady business momentum there. Also, attrition has held stable at 12.6%. This is showing improved employee retention trends as well. Let's also keep it going with the earnings. It's been a strong second quarter for Anand Rathi Wealth with steady growth across the key metrics. Revenue has risen 8.4% to 297 crore rupees compared to 274 crore rupees a year ago. So the company's asset under management also saw a healthy 22% year-on-year rise. Now EBITDA stood at 137 crore rupees, up 6.6%, though the EBITDA margin eased slightly for the company, down 78 basis points to 46.17%. Net profit has climbed 5.8% to 99.35 crore rupees, while the profit before tax came in at 134 crore rupees, which was up 6.3% year-on-year. So the company has also declared an interim dividend of 6 rupees per share. This is underscoring confidence in its performance. Next up, we have Landmark Cars, which has reported a solid performance in the September quarter. You know, they came out with their business update yesterday. Now, this is boosted by festive demand and price cuts. So, vehicle sales have surged 35% year-on-year to 1,403 crore rupees, while after-sales spares and other revenue has risen 10% to 252 crore rupees. So, total revenue for the quarter climbed 30.5% to 1,655 crore rupees, and this is reflecting a strong momentum across the big business segments there. So the company is also expanding its partnership with Mahindra with a new outlet opening in Hyderabad to strengthen its retail footprint. Just Dial has also reported a weak second quarter with collections slipping 1.9% year-on-year. So margins were under pressure due to higher employee expenses and also increased advertising costs, while the top-line growth was primarily driven by volumes and realizations. So despite the weak quarter, Nuvama continues to maintain a buy rating on the stock with a target of 1,200 rupees and also citing long-term potential for the counter. The Supreme Court is set to urgently hear Roche's plea against Natco Pharma likely later this week on Thursday or Friday. So Roche, the maker of Risdiplam for spinal muscular atrophy, which has moved the apex court to stop the Natco Pharma from launching a cheaper generic version in India. So earlier, the Delhi High Court allowed Natco to proceed with its launch, prompting Roche to actually escalate the matter to the Supreme Court on grounds of the patent infringement. Now, the case highlights the ongoing tensions between intellectual property rights and also affordable medicine access in India. SG FinServ is undergoing a major leadership reshuffle with the CEO and CFO stepping down. So Saurabh Dhawan, CEO, has resigned effective November 3 and will be succeeded by Vinay Gupta. Meanwhile, Sahil Sikka, CFO and COO, has also resigned effective December 31, and with Sanjay Rajput, all set to take over as the new CFO. So these changes mark a significant broad-level transition as the company prepares for its next phase of growth. Let's also shift our focus to the EMS space now. With the Q2 earnings season kicking off, PL Capital has released a report outlining their expectations for the quarter. Now, along with their top stock picks in the sector, the brokerage expects Kane Sirma and Avalon to continue the momentum. Now, they are also penciling in the pickup in the order book across the companies. Now, on to an interesting update. Then Fredon Pharmaceuticals has launched Gen biscuits for dogs, marking its foray into the branded pet products. The company plans to shift from OEM to branded offerings by 2029 and also aiming for higher margins and stronger brand presence. So segments like pet care, nutraceuticals and also mobility are projected to see 35 to 40% CAGR, and this is also signaling a robust growth potential. IRDA has reported a robust second quarter with revenue rising 26.2% to 2,057 crore rupees from 1,630 crore rupees a year ago. So net profit has surged 41.6% to 549 crore rupees, which is up from 388 crore rupees in the same period last year. So net interest income, that is the NII, has also seen strong growth, which has climbed 49.4% to 817 crore rupees versus 547 crore rupees year on year. So results underscore IRDA's solid momentum in the renewable energy financing and the sustainable growth space. Next up, we have LG Electronics, which has made a blockbuster stock market debut today in India. Now, the shares have roared out of the gate with a massive 50% premium over its IPO price. Now, they opened at 1,710 rupees on the NSE and 1,715 on the BSE. So this is up from 1140 rupee, the issue price. So rewarding investors after an oversubscription frenzy of 54 times. So the premium listing is a nod to LG's dominant slice of India's booming consumer electronics market, where demand for smart appliances is skyrocketing. So no new cash for expansion here, but the listing unlocks value for the Korean parent while signaling rock-solid confidence in also India's middle-class spending power. Now on to the brokerage verdict for the blockbuster listing of the day. Brokerages have set a target price for LG Electronics in the range of 1700 to 1850 rupees. So MOSL highlights strong return ratios, while Ambit expects GST cuts to support the growth and also premiumization to boost the margins. Nomura whereas anticipates that an improvement in EBITDA margins and also reflecting better profitability in the coming quarters. Tata Investment Corporation has executed its first ever stock split today. So this sparked a head-scratching 90% plunge in the share prices that has nothing to do with the company's health. It's all optics. So pre-split shares closed at 9,922 each. Post-split, they opened at 1,042 rupees, adjusted for 1:10 ratio, where 1:10 rupee face value share becomes 10:1 rupee shares. So this boosts actually, liquidity and also making the stock cheaper and easier to trade, potentially drawing in more retail investors without changing the market, the overall market value of holdings. So experts urge the shareholders to stay calm. If you held one share before, you now have 10, worth the same total. So it's a non-event designed to fuel growth, not a red flag. Now it's time for an NDTV Profit exclusive, viewers. Sebi is mulling a big shake-up to cool down the frenzy around weekly options trading. So the plan is to phase out these short-term contracts through a gradual sunset clause to settle the existing trade smoothly. Now this comes as Sebi worries that retail traders dominate this $4 trillion market, which is driving the volatility and the losses. So a consultation paper is due in 2 to 3 months, which, with changes unlikely before next year. So despite the weekly options pumping up securities transaction tax revenue, it's a bit to refocus the derivatives on their original purpose, which is protection and not gambling. Okay, so silver prices in India took a breather today, slipping from their recent record highs as investors cashed in profits and the multi-commodity exchange hiked margin requirements. Now, after hitting a peak of 1.46 lakh rupees per kg last week, December futures have dropped by 2.36%. Analysts point to profit booking after a stellar rally fueled by global safe haven demand and a weaker rupee. The MCX moved to raise margins by 33% from 15,000 to 20,000 per lot, which actually aims to curb the excessive speculation around, especially after silver has surged 59% this year, outpacing gold. So globally, spot silver also eased to $51.82 per ounce from a high of $52.12. Now, India's wholesale price inflation has eased to 0.5% in September 2025, which is down from 0.52% in August. So this drop offers some relief to the businesses and also consumers amid a tricky economic landscape. Now, this dip is also driven by stable manufactured goods prices and a cooling of core inflation. So the government data released earlier this month shows food and fuel prices remaining same, though vegetable deflation continued to drag the overall numbers. Analysts see that this is a green light for the Reserve Bank of India to keep its 4% inflation target in sight, possibly easing the interest rates to boost the growth. Now, India's retail inflation has plunged to a 100-month low of 1.5% year-on-year in September 2025. But according to Bank of America's analysis, now this is mainly due to sharp drops in the food and beverage prices, especially vegetables and pulses showing deeper deflation. Now, BOFA says that this low print isn't from the recent GST tax cuts. With prices staying tame, BOFA predicts CPI will actually hover below 4% through the rest of 2025. Now, this is paving the way for the Reserve Bank of India to actually ease the rates further. Now, it also expects 225 basis point cuts in December and February meetings. So, looking ahead, October CPI could actually dip even lower to 0.5% year on year. So, which will be the series lowest. So, BOFA has also trimmed its FY26 inflation forecast to 2.8% from 3.8%. This is also signaling a softer economic landing and also more room for growth boosting policies amid this cooling price pressures. Now, in a major push to tap into India's booming digital economy, Google has pledged over $10 billion to build a massive data center in the country. Now, this investment announced on October 14 marks one of the tech giant's largest commitments in Asia outside China. It focuses on the facility in Navi Mumbai to handle surging demand for cloud services and AI tools. With India's internet users expected to hit 900 million by 2026, the center will store and process the data locally, cutting delays for users and also complying with growing data privacy rules. Google's India head called it a game changer for businesses. Now, this also builds on their prior $3 billion in local investments for mapping payments and also developer support. Speaking on Google's massive investment, Andhra CM Chandrababu Naidu has credited PM Modi's vision for luring giants like Microsoft to Hyderabad and also now Google to Vizag. So this potentially acts as a key to hitting Viksit Bharat by 2047 through AI. IT Minister Ashwini Vaishnav said that it will fuel the India AI mission and also scale up our IT pros. Now, he also eyes Andaman as a strategic undersea cable hub to ease Singapore's congestion with full government backing for investors. Now, in a big win for India, 70 million EPF subscribers, the Employees Provident Fund organization has overhauled its partial withdrawal rules to make them simpler and more flexible. So gone are those days where 13 tangled provisions were there. Now the merged into 3 easy buckets. So which is essential needs, housing needs, and special circumstances, allowing up to 100% withdrawal of your full balance. Now, no more strict limits. Education pulls up 10 times, marriage 5 times, and just 12 months service needed across the board. So under special circumstances, skip the explaining reasons like calamities or the unemployment. No documents required, cutting rejections and also hassles. To protect your the nest egg, 25% of contributions stay embarked as minimum balance for compounding at 8.25% interest. Plus, the auto settlements also go digital and paperless. Now, in a shocking news from the crypto world, a prominent cryptocurrency CEO was found dead in his Lamborghini. Authorities are investigating this incident, which comes in the wake of a severe market crash that sent shockwaves through global crypto markets. Now, in a game-changing move from Mumbai's hard properties owners and also businesses, the Maharashtra government's revenue department has actually scrapped the old rule tying document registration to your local area stamp office. So this means now anyone in Mumbai city or the suburbs can actually head to any of the 6 convenience stamp offices across the city like Borivali, Kurla, Andheri, or the main ones near the old custom house to actually get papers like sale deeds, rental agreements, wills, and also inheritance documents stamped and sealed. Now, no more trekking across town or waiting in queues based on your PIN code. So this flexi system slashes the red tape, speeds up approvals, and also ease the daily grind for millions juggling real estate deals in India's financial capital. Delhi's ambitious drive to cut vehicle pollution through electric vehicles has hit a major roadblock. A stalled subsidy scheme leaving 26,800 owners out of pocket by nearly 42 crore rupees, all because the government's 2020 EV policy has not been updated in 5 years. So the old rules offer up to 30,000 rupees off two-wheelers, 1.5 lakh for four-wheelers, plus waivers on registrations and road taxes, but without a fresh policy. Claims are piling up and processing is crawling at a snail's pace. So this glitch is frustrating early adopters who switched to EVs expecting quick rebates. Now, in response, the Delhi government is rolling out a new digital platform to verify and disburse the subsidies faster, aiming to revive the momentum. Now, the World Health Organization has sounded a global alarm over 3 Indian-made cough syrups contaminated with diethylene glycol. Now, this is a deadly toxin linked to kidney failure and the tragic deaths of at least 19 children in Madhya Pradesh this year. So this is also a part of the grim pattern echoing over 140 child fatalities worldwide from similar Indian syrups since 2019. So the tainted batches are Coldriff from Sresan Pharmaceuticals in Tamil Nadu, now Respi Fresh TR from Rednex Pharmaceuticals in Gujarat, and Relife from Shape Pharma in Gujarat. Now all of these are marketed for cough, flu and colds but sold only domestically so far. India's drug regulator has flagged the issue after tests have revealed DG levels up to 48.6%. Now this is prompting the arrests like Sreesan's owner and also license cancellations amid 364 manufacturing violations. Now, WHO is urging health authorities everywhere to screen the oral meds from these firms rigorously, report the detections immediately, and also close the regulatory gaps in the DG testing for local drugs. Global pop sensation Ed Sheeran is set to feature as the face of Barcelona ahead of one of the football's most iconic fixtures, El Clasico. The English singer, known for his chart-topping hits and massive fan following, will appear in promotional campaigns as Barca prepares to take on their eternal rivals, Real Madrid. Now, this unique collaboration bridges the worlds of music and football, aiming to excite the fans and also bring a fresh, star-studded spotlight to the historic clash. With both the pitch and the pop world buzzing, this El Clasico promises drama both on and off the field. With that, viewers, it's a wrap on this edition of Market Express, but please stay tuned to NDTV Profit and don't go anywhere.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Meeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ये बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller citizen towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Nifty manages to close above the 25,100 mark. The benchmarks fall for the second day in a row. Nifty PSU banks fall over 1.5% for the day, emerging as the top sectoral loser. Investors should sit tight and avoid random moves in a stock market that is reeling through global economic and geopolitical uncertainty, according to Riddhham Desai, Managing Director and Chief Equity Strategist at Morgan Stanley. And it's a bumper listing for LG Electronics as it lists at a 50% premium over the issue price. Brokerages pencil in targets ranging between 1700 to 1850. With its surge in popularity and riding high on its Make in India motto, what's next for Zoho Corporation? NDTV Profit's managing editor Tamanna Inamdar discusses all of this and more with Sridhar Vembu, co-founder and chief scientist of Zoho Corporation. Adani Enterprises Limited partners with Google through its joint venture Adani Connects to build the largest data center campus outside of the United States. And Sebi deliberates a plan to phase out weekly options as the capital market regulator grows increasingly concerned that these contracts are no longer serving their intended purpose of hedging and have instead become tools for short-term speculative trading. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Over the next half an hour, I'm going to take you through the latest in markets as well as national and international news. So let's dive right in and have a look at how the markets fared today. We saw benchmark indices underperforming the broader market, slipping for the second straight session today. But despite the weakness, the Nifty managed to hold above the 25,100 mark. Now, sectorally, we saw PSU banks leading the decline with the Nifty PSU Bank Index falling over 1.5%, making it the worst performing sector of the day. Overall, all sectoral indices ended in the red, reflecting broad-based weakness across the market. But for more, let me quickly go over to my colleague Puneet, who has all of the details.
Well, it was another day which saw sustained pressure on the benchmark indices with the Nifty 50 ending just a tad above 25,100, while a positive of ending over the psychological benchmark. It was a day where we saw consistent pressure both on the Nifty 50 as well as the majority of the sectors as well. In terms of the biggest losers, we did see stocks like Dr. Reddy's as well as Bharat Electronics be the biggest losers in the Nifty 50. Another day where we've seen pressure on the defense names, but not enough to form a sustained trend. So that'll be the other part to watch out for. When you look at the PSU Bank Index, that was down almost 1.5%, and it was the top sectoral losers of the day. It was led by stocks like Bank of Maharashtra post its Q2 earnings, where profits fell by almost 50%, while the other stocks like UCO Bank also fell the most in the Nifty PSU banking space. Amongst others, we did see the Midcap index actually snap its 3-day losing streak, but it did outperform the benchmark index. Vodafone Idea as well as Uno Minda were the stocks that were under pressure today, while on the Nifty small cap 250 that did fall for the second consecutive day, and it was led by Just Dial, which reported its Q2 earnings, and we are seeing some other stocks also like Deepak Fertilizers that were continuing with the pressure on the downside. Amongst others, we saw Nifty Oil and Gas as well as the Nifty Realty snapped their 3-day streak as well. They were on a gaining momentum, but that got broken down today in the trading session. We saw stocks like Brigade Enterprises as Godrej Properties also being under pressure, and that essentially dragged the Nifty Realty down as well. Finally, we also will be in an interesting session tomorrow because we have the IT earnings coming in the evening, Persistent as well as Tech Mahindra. So that will have a bearing on that sector tomorrow. But the banking space will now become active with Axis Bank coming out with its earnings as well. So we are entering the last phase of the week where multiple earnings will have an impact on the index, but that'll be something to watch out for.
And investors are being advised to sit tight and avoid random moves as the stock market navigates ongoing global economic and geopolitical uncertainty, says Riddhham Desai, Managing Director and Chief Equity Strategist at Morgan Stanley. Now, earlier today, NDTV Profit's markets editor Neeraj Shah spoke to Riddhham Desai to get his take on the current market scenario. Here's a snippet from that conversation.
So, yeah, the world, I mean, see, Neeraj, uncertainty is part of life. Okay, I will tell you something. When I was walking into this room, one of my colleagues walked past and she said, "Oh, so you're doing an interview?" I said, "Yes, maybe the last one of my life." And she said, "Why would you say that?" So I said, "This morning could have been the last one of my life." The point is, uncertainty is so underestimated. And we only feel it when it creates events around us. When we lose a near or dear one, when the markets move a lot. But life is uncertain. So there's nothing unique about the circumstances today. It has always been uncertain in the stock market. I think the epitome of uncertainty is the stock market, and it remains so. Do I have any idea what will happen in the next 12 months? No. Did I have any idea 12 months ago? No. What we do is lay down a framework so that you can think through it. And the most important thing that you can do is sit through that. Because sitting tight and doing nothing is the best way to accumulate wealth.
Okay.
Yeah.
So
everything else is only going to destroy wealth. If you behave randomly to random events that are happening all the time, it's very hard to make money. Or rather, I shouldn't say make money, but very hard to create wealth.
That's true maybe for wealth, for life, everything. By the way, you had me scared for a minute out there. I was wondering, why is it that I'm not getting a chance to talk to Riddhham again? But okay, no. Well, long life, all 20 fingers crossed for that. Long period in the equity markets for all of us to gain from your wisdom. But so let's talk about the framework then, Riddhham. What's, to your mind, the framework as we look forward to the next 12 months?
So the framework is as follows. Coming out of COVID, I think the government and the central bank tightened. And I'm referring here only to India right now. We'll come to the world a little later. Because of the fear that inflation will surge. It was the right policy to do. Because coming out of COVID, there was so much pent-up demand. It was likely that inflation would have surged. And my God, were they successful. Okay. Supremely successful. India came out of COVID with the least inflation problem relative to the whole planet. Everybody else was grappling with much more inflation, including China. So that was a hugely successful policy. But as usual, when you are very successful, it takes time to turn the ship. Right? The ship doesn't turn as quickly. The ship is of that nature. India is a very big country and you can't turn this thing around at will. And so we arrived in 2024, and because of extraneous circumstances, it was an election year, spending got curtailed, and we had a really bad monsoon, in terms of heavy rains. So by the September quarter, real rates were high, and the fiscal deficit was annualizing at 3.4%, down from 6%, so it had halved.
Meanwhile, Persistent Systems has reported a solid Q2 result showing growth across key metrics compared to the previous quarter. We're seeing net profit rising to 11% to 471 crore from 425 crore, driven by revenue growth of 7.4% to 3,581 crore from 3,334 crore. For more on this, let me quickly go across to my colleague Jasmeet, who's been standing by for a detailed breakdown of the earnings. Jasmeet, take us through the latest. This is particularly significant as this also signifies the start of the IT pack actually going to be announcing all of its earnings. We're expecting Tech Mahindra later this evening, but take us through what these numbers are looking like first up.
Alright, thank you for that. So this is the start of the mid-cap IT firms, you may say. If you look at the key results of Persistent, we see the numbers have beat the estimates, while on the other hand, this is the 22nd quarter where the company has shown a consecutive growth on quarter after quarter. While if you look at the CC growth-wise, the company has shown a growth of 4.4% versus 3.3% in the previous quarter. Again, an uptick in terms of CC terms as well. Now, in terms of the order book, company clocks in an order worth ₹609 million in this particular quarter versus $520 million in the previous quarter. Now, in terms of key financials, the revenue is up 7.4%, but the estimated was to be around somewhere between 5.48%. So it's an uptick by 2% from what was estimated by the streets. Now, in terms of EBIT, it's up 12%, while the estimate was 6.5%. It's nearly doubled what the estimation was. Now, in terms of margin expansion, we expected the margin to expand by 75 basis points, but margins have been coming at 15.69% versus what it has come at 16.28. So company has entered the 16% range mark in this particular quarter. On the other hand, the net profit is up nearly 11% while the expected number was 3.8%. So see a huge uptake in numbers of the profit booked in by the company. So we have con call lined up later in the evening to get more updates on it. But all in all, a good set of numbers and a good order booking for Persistent Systems.
Jasmeet, these numbers, like we're saying, indicating efficient cost management and sustained demand, if we can safely say, in IT services, though growth rates are moderate amid this very competitive sector. Like you rightly said, all eyes on the call later this evening, and of course Tech Mahindra also slated to announce its results. Let's move on now. LG Electronics India made a stellar market debut with its shares listing at a significant premium following a strong grey market performance. Now, the stock listed at a 50% premium of its issue price of 1,140, underscoring robust investor demand and optimism for India's consumer electronics sector. But for more on this, I'm going to go across to my colleague Mahima, who's going to give us all of the details.
Right, so there are two things, right? Markets are not doing very well in trade today, but despite that, we're seeing a bumper listing coming in on LG Electronics. So 50% is what we've seen at the time of listing, and it is sustained that kinds of gains till now. So it's very interesting, moves coming in on the newly listed company. Now, in terms of what brokerages are penciling in, the target prices that a lot of brokerages that have initiated coverage are around 1,800 odd rupees for LG Electronics. I'll start with Motilal Oswal, that is given a buy rating with a target price of 1,800. High industry growth potential, holds leadership position is what is making them bullish. Premiumization and localizations to drive profitability. Focus on localizations will further expand margins also for the counter, and they expect LG to trade at higher multiples given the strong return ratios as well. Consistently generating operating cash flows over 154 billion is something that they are liking. In terms of Ambit, they've initiated coverage with a buy rating and target price of 1,820. This is the highest target price we've seen so far. They've said that the export could be a key component with the new Sri City, that is doubling its capacity going forward. However, it will slightly in the near term impact the ratios, but could be a big one for LG Electronics. Lastly, in terms of what they're saying in terms of increased localization and premiumization, that will drive the margin expansion going forward, and GST cut could also augur growth. The last one is Nomura, initiated by, again with a target price of 1,800. They're saying that focus on mass premiumization, exports and B2B initiatives to drive growth and improve profitability as well for the company. India's demographics provide structural growth visibility for large appliances, and they estimate EBITDA margins to improve from 12.8 to around 14.1% by FY28, led by better mix, operating leverage as well as localization. Lastly, they expect the company to trade at the midpoint of trading band between 30 to 45 times. So this is the overall view of what brokerages are figuring out with regards to where LG Electronics stands.
Thanks so much for that, Mahima. And we also spoke with Sanjay Chitkara, Chief Sales Officer at LG, where he said that the premium segment in India's appliances and electronics market is set to grow sharply to about 25 to 28%. He also said that premiumization and localization are the key engines driving that profitability. Let's listen in.
See, our premium product segments market share have already exceeded 30% in many categories. Like if I talk about OLED TV, our market share is 62.9. I mean, that's a very remarkable share in such a competitive market. Our side-by-side shares are 43.5%. Similarly, the other products are in the range of plus 30%. So we still believe we can match our OLED TV market share in time to come. I mean, we will definitely benchmark this. Being a sales leader, we will try to catch as high as share we can in near term future.
And with the government now leading by example, India's Swadeshi tech movement has found a powerful new champion right in your inbox. Zoho's homegrown success story is often held up as proof that world-class technology can be built in India for the world. NDTV Profit's managing editor Tamanna Inamdar spoke to the man driving that vision, Sridhar Vembu, co-founder and chief scientist of Zoho Corp. Let's listen into a snippet of that conversation.
There is one thing to want to be Swadeshi, and there is another thing to have a product that people will truly adopt and switch to. The reason why Gmail is so prevalent or WhatsApp is so prevalent is because of its ease. In the case of WhatsApp, it's end-to-end encryption and all of those factors. Are you convinced and are you confident that the products that you are providing now go beyond the symbolism to products that people will actually want to switch to and use?
Yeah. So let me come to Zoho Mail. We are globally competitive. We are winning customers all over the world. We are winning customers in the US, in Canada, in Mexico, in Colombia, in UAE, Australia, all over. In fact, 90% of our revenue is coming from outside India. And Zoho Mail is one of our fastest growing products. So are we globally competitive? Absolutely. We are competitive against Microsoft and Google in that market. So that's why we are winning customers. In India, the government, the NIC selected us after very stringent competition with over 18 audits were performed on every aspect, security, privacy, our data center practices, all of it, information, are we resilient, all of it. So that's why I think I'm confident that we have really good technology in it. And similarly, Aratai, the messenger software, that actually came from our Zoho Click platform. That is also winning globally now against very tough competition from Microsoft Teams, Slack, all of it. What we have done is taken the same technology foundation and really created this consumer business to consumer offering in Aratai. So it is because of that foundation we are confident that we can compete with them, not only in India but globally.
Okay, there's also a matter of habit, and I was looking this up. Aratai means chit chat or small talk in Tamil. Yes. So I'm glad that that's the name you've given, to have that spread as well. My question is, what are the reasons why, for example, anyone watching this should switch from a Gmail to a Zoho Mail or from a WhatsApp to an Aratai? What is that one proposition in each case?
Yeah. In fact, a lot of customers switch to Zoho Mail because it's much more usable and much more, it's actually cool to use Zoho Mail. A lot of people say that now. Zoho Mail users around the world tell us that's the reason they switch. It's more feature packed. It is richer visual, interface and more usable. So that is, and the search, all those capabilities are world class. Our spam filtering is world class. We have phishing detection, all of that built in. And we are also building in the AI capabilities in it. So that's the reason people switch to Zoho Mail.
Now, Google has announced a massive investment of 87,520 crore to set up an artificial intelligence data center in Visakhapatnam, a move that promises to give a significant boost to both Andhra Pradesh's economy and India's digital ambitions. Now, the project is expected to generate thousands of jobs and attract a vibrant ecosystem of AI-driven businesses to the region. Adding to the momentum, Adani Connects, a joint venture of Adani Enterprises, is partnering with Google to cement the city's position as a key hub for technology and innovation. Let's go across to my colleague Rishabh Bhatnagar for more details on this investment.
Right, you have a major announcement coming in from Google about a $15 billion investment that they've announced to set up a new artificial intelligence hub in the state of Andhra Pradesh in Visakhapatnam. What we're also picking up is the fact that this will be a gigawatt scale AI hub. What this essentially means is that this will be a 1 gigawatt data center at the very least. You will also have several other undersea cables that will also be using Vizag as a station hub for Asia, and also you'll have a major sort of energy and power infrastructure as part of this very campus to also fulfill the needs of this particular data center. Remember, the sort of energy that is required to keep these data centers running has been a cause of concern, and that is something that has been kept in mind as well. What we're also seeing is that Google has said that it will be housing all Indian data locally, and that is to meet India's sovereign needs. And apart from that, you also have the full stack AI infrastructure that Google will be providing as a result of this announcement. What this will also contribute to is, of course, the government's India AI mission. Google will be contributing to the compute capacity that the government wants to expand under that India AI mission, and these GPUs and TPUs will be available to others as well, like startups, other private companies that require these processing units to train their AI models, to train more and more of their AI programs. That is something that Google will also contribute towards. You had the ministers, you had Ashwini Vaishnav, the Minister for Electronics and IT, the Finance Minister Nirmala Sitharaman, Chief Minister Chandrababu Naidu of Andhra Pradesh, and also the Electronics Minister Nara Lokesh. All of them in presence, all of them said that this is a major decision both for Andhra Pradesh as well as Google, and this is a sign of more to come in terms of investments coming in terms of developing India into an AI hub.
Thanks so much for that, Rishabh. Meanwhile, Andhra Pradesh Chief Minister Chandrababu Naidu also said that this is a game changer for the state and that he looks forward to AI and tech development in India. Union Electronics and IT Minister Ashwini Vaishnav also echoed the sentiment, saying that this boost to AI infrastructure will become a major strength for India's startups, research and youth. Let's listen in.
I am appreciating Google team for speed up bringing this project to Visakhapatnam. You are all aware from the beginning, as a politician, always I am promoting technology. That is the proof of concept in Hyderabad. Now it is next level of development. We started iTech City and promoting IT. Now artificial intelligence and also data centers and also quantum computing. For all these things, driving force is the Honorable Prime Minister. Whenever we bring some proposal, immediately he is doing, not only doing, he is asking to implement it at a faster pace. This is a very good momentum. I have seen so many changes in India. Indians are all well known for information technology. You take any global company, Indian origin are the CEOs. That is our strength.
ये $15 बिलियन का इन्वेस्टमेंट वर्ल्ड क्लास डेटा सेंटर और AI हब में होगा। हम सब जानते हैं कि AI के कारण हमारी ज़िंदगी का हर एस्पेक्ट इम्पैक्ट हो रहा है, सब चीज़ों पे प्रभाव पड़ रहा है। हम उस प्रभाव को कैसे लाभकारी बनाएं, कैसे हम जल्दी से जल्दी हमारे यूथ को, हमारे IT प्रोफेशनल्स को रीस्किल करें, अपस्किल करें, AI रेडी बनाएं, जिससे कि जो नई अपॉर्चुनिटीज़ आएगी विश्व में, उन सब अपॉर्चुनिटीज़ को भारत सबसे पहले ले।
And let's get you an NDTV Profit exclusive now. Sources are telling us that Sebi is considering a phased discontinuation of weekly option contracts. And for settlement of existing weekly expiry contracts, a sunset clause may be introduced. Shrimi now joining in with what she's picked up from her sources.
Well, amid all the talks and varied reports around weekly option, sources tells NDTV Profit that Sebi is actively working towards a phased discontinuation of weekly option. In fact, the move will be carried out in a calibrated manner given the sensitivity of the issue and it is likely to introduce a sunset clause for the settlement of the existing weekly contracts once the regulator finalizes its decision for smooth transition. In fact, sources indicated that discussions are underway in the matter and a consultation paper in this regard to be put out soon in next 2 to 3 months. And since transition could perhaps take a few months time, hence the changes are unlikely to be implemented this year. Now, Sebi is said to be forming a view that weekly options, which were originally introduced to kind of boost market liquidity and for the hedging purposes, have now become dominated by short-term speculative trades. And in fact, the regulator believes that such contracts are actually fueling volatility without adding much to market depth or stability. In contrast, monthly options are seen as more stable and better aligned with the institutional hedging strategy, and hence regulator is exploring whether a greater focus on the longer duration contract could be considered to helping curbing excessive speculation and bring discipline back to the derivative trading.
Thanks so much for that, Shrimi. And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Miraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit. A story of change, a path to renewal, a leader reimagining her nation's future.
This will be my first official visit to India as the Prime Minister of Sri Lanka. So looking forward to participating in the NDTV World Summit, where I will have the opportunity to engage with global leaders and thinkers.
Catch Sri Lankan Prime Minister Harini Amarasuriya at the NDTV World Summit 2025, 17th to 18th October on the NDTV network. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show. At a time of global uncertainty, when leaders balance risk with resolve, the most definitive leadership conversation unfolds in New Delhi this October. Catch Prime Minister Narendra Modi defining India's moment in history, Harini Amarasuriya, Sri Lanka's Prime Minister, steering the nation from crisis to recovery. Rishi Sunak, the man who reshaped Britain's political narrative. Tony Abbott, bringing clarity to the geopolitics of the Indo-Pacific. Live and exclusive at the NDTV World Summit 2025, 17 to 18th October on the NDTV network, bringing the world to India and India to the world.
The best app to use is the NDTV app.
Hello and welcome to KYC, that's Know Your Company, and I'm Hiral Dadia. The company on KYC's radar today is Anand Rathi Wealth, and this is basis the kind of numbers that the company has reported in the second quarter. Now, first let's quickly understand why are we going to talk to Anand Rathi and what is it that we at NDTV Profit and all the investors want to know. First up, the company's actually achieved more than 50% of the full year revenue and PAT guidance in just the first half of FY26. So will this lead to a revision for FY26 or not? And if the margins of 45-46% are sustainable going ahead. Second up, if you're talking about their FY26 guidance, is that going to be achievable? Because they've guided for 1 lakh crore AUM. So what is that going to look like? Which segments are going to be the growth drivers for the company in FY26? And the industry outlook when it comes to increased SIP flows and the kind of retail participation that they are going to keep as a check as well. So these are the key questions we're talking about. But first up, let's understand more about the company. Now, Anand Rathi was a company that was incorporated in 1995. Absolutely, they are AMFI registered mutual fund distributor, and they have a wide product portfolio of wealth solutions, financial products, and they're looking at distribution of those as well. In terms of the business verticals, private wealth, digital wealth segment, and Omni Financial Advisor, these are the three business verticals that Anand Rathi actually caters to. And in terms of their AUM breakup as well, if you see, equity mutual funds is the maximum, which has exposure of around 67%. Debt mutual fund is around 13%, and if you talk about SIP and others, that is close to around 18 to 19% in totality. Moving on, let's quickly now understand what are the kind of rating parameters that we are going to consider. First up, the income statement, balance sheet, the operational highlights as always, return ratios, shareholding patterns, street credentials, valuations, and guidance. These are the parameters that we are going to consider as well whilst doing a KYC on this counter. First up, let's look at the income statement. Now, the revenue growth, if you see on your screens as well, is absolutely strong. You're talking about a 3-year compounded growth of around 32 to 33%. The profit growth has been consistent. A 34% compounded growth is what you're looking at, and the margins have been absolutely stable. Now, the increasing operating leverage, because your expenses are rising, revenues are rising faster, the operating leverage for Anand Rathi Wealth is also positive. And that is what the key takeaway is on the income statement, and hence we've given it a thumbs up so far. Moving on, let's look at the second matrix, and on the back of this only, if you just look at the first or the second quarter numbers, on a sequential basis, a good growth that has come in there. You're talking about a 23% year-on-year growth on the revenue. The margins also are pretty strong. The profit number has seen a growth of around 32% this time around as well. So strong numbers coming in there, and you're talking of a 46-47% kind of a margin profile, and hence the question, how sustainable is those going to be from here on? So that's with regards to where the income statement goes. Moving on, let's look at the second parameter. We're talking about the balance sheet of the company. AUM, a 32 to 33% CAGR growth is what we've seen. Now, there has been growth in the assets and the equity of Anand Rathi. A moderate increase that has happened when you talk about the liabilities vis-a-vis the strong equity growth that you've seen for this company. Now, a sharp increase in the investments, in the long-term investments in FY25 as compared to almost 112 crores in FY24 indicates a strategic increase in investments or possibly deployment of surplus funds as well. And the strong growth from FY23 to 24, wherein the AUM jumped almost 50% from FY23 to that 59,000 crores. That's a big leap. From there, the growth has slowed somewhat around 30% because that increase has happened from around 59,000 odd crores to nearly 77,000 odd crores in FY25. But still, this is very healthy growth that we are talking about, though lower than the previous year's spike. And the continued strong momentum that we are seeing in terms of FY26 as well is interesting, because in the first quarter of FY26, the AUM has further grown to almost 87 to 88,000 crores, which is approximately 27% year-on-year growth relative to the same quarter in FY25. So the growth has continued, though it is not accelerating from here on. And hence a thumbs up coming in on the balance sheet as well so far. Now let's look at few of the operational highlights. If you look at the managers, I mean, it's gone up from 293 to almost 380. The active client base has also increased for the company from 8,300 to it's gone up to 11,700. And your AUM per relationship manager has also seen a good growth of from 129 crores in FY23 to almost 198 crores. The clients per relationship manager has remained stable in that 29 to 31 kind of a range. But again, strong matrix coming in on the operational side, and hence a thumbs up given in on this parameter as well. Moving on, let's quickly look at all the return ratios of the company. Now, strong and improving returns is what we've seen in FY25. It's relatively stable, you could say that, because if you have to compare this in terms of FY23 to FY24, if you talk about all ratios, they have been absolutely high, which suggests that the company is actually generating substantial profit relative to the capital it uses in terms of the equity assets. And this is quite good, especially for the wealth or financial services space as well. It's actually suggesting the efficient use of equity and assets. In fact, if you talk about the revenue and PAT growth, which we took you through in the income statement, the company has seen strong revenue growth and profit growth in recent years, and more profit on a relatively stable equity base, which is what is inflating your return on equity. In fact, the company has shown very strong return ratios over the past 3 years, where FY25 actually stands out. Your ROE is in that 44-45% of range. Your return on capital employed is approximately 60%, and your ROA around 32 to 33%. And these are high relative to many of the peers. So the trend is upward, or probably stable to upwards, after a modest dip that the company actually saw from FY23 onwards to 24. And FY25 seems to have marked a breakout or a strong improvement in efficiency and returns as well. In fact, a good combination of high profitability, low financial risk, that is low debt, and efficient use of capital and assets is what you're seeing. Just because, they're plateauing at some extent, we've given it a neutral rating so far. Now, let's look at the shareholding pattern. Again, a neutral rating on this one, and the only reason being is your promoter stake shareholder has been declining. Your FIs also have remained slightly stable in that 4.8 to 4.9% kind of a range. Your DIIs, again, very stable at that aspect. So you're not seeing further FI or DII participation that is increasing here, and hence a neutral rating coming in on the shareholding pattern as well.
Street credentials again are neutral because of the last 1 month performance. The stock is down 3%. You know, if you talk about the last 6 months of YTD, it's that 50 to 67 kind of returns that we've seen from this counter. 5 years, again, it's a 940% return, but again, a neutral rating coming in there only for this short-term pain in the last 1 month. In fact, if you talk about valuations as well, let's look at that parameter. It appears priced for premium growth. Please mark, I'm talking about price for premium growth rather than value over here. The reason being is, if you have to compare a Anand Rathi to a Prudent Corp or a Nuvama Wealth, it's the most expensive. The valuation multiples have constantly remained high as well for a Anand Rathi Wealth. And though it's eased now slightly, it's still less frothy than the past peaks as well. And hence, you're talking about a downward reaction on this one, and hence a thumbs down when you talk about the valuations of the company from here on. Lastly, outlook. Now they've guided for a revenue of 1175 crores in FY26. This is versus a 980 that they achieved in FY25, and a profit number of 375 crores is what you're looking at. AUM at 1 lakh crore. So this is going to be interesting to watch out for from here on. Now quickly, let's just do a summation of all the ratings so far. 3 thumbs up, income statement, balance sheet, operational highlights, neutral on return ratios. Shareholding, street credentials is a neutral. Your valuation is a thumbs down because it is expensive. And your guidance again is a thumbs up, which takes you to a 5.5 on 8, which is a very strong rating again on a Know Your Company when you talk about Anand Rathi Wealth. But let's quickly slip into a short break now, and then we'll take this conversation forward with the management. We have Feroz Aziz, Joint CEO, who will be joining us. Please stay tuned.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller citizen towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit. A story of change, a path to renewal, a leader reimagining her nation's future.
This will be my first official visit to India,
as the Prime Minister of Sri Lanka. So looking forward to participating in the NDTV World Summit, where I will have the opportunity to engage with global leaders and thinkers.
Catch Sri Lankan Prime Minister Harini Amarasuriya at the NDTV World Summit 2025, 17th to 18th October on the NDTV Net.
Welcome back. You're watching Know Your Company on NDTV Profit. Now, Anand Rathi is what we're talking about. Feroz Aziz joins, CEO joins in. Feroz, welcome to the show and always a pleasure to speak to you. First up, you've already achieved more than 50% of your revenue and PAT guidance in the first half of FY26. One, sustenance from here on, and two, does this mean we could probably see a revision in terms of your guidance upwards?
Good afternoon, good morning in fact. Yes, we have penetrated 52% on PAT and 50% on revenue, a little over 50%. But do we revise the guidance? No, because we have been always taught to undercommit, over-deliver, and I think half year is not good enough proxy for us to understand the full year. So we'll maintain the 375 crore PAT number and 1,175 crore revenue number and 1 lakh crore of AUM mark. AUM in Anand Rathi is counted very, very microscopically and not inflated. So that's, we are at 91,568. The odds of this happening has gone up substantively. And sustenance, when it comes to sustenance, we have been indicating a 20-25% growth for a decade at least. But yeah, the believability of that will only come. This is only our 16th quarterly result. After we've got listed, I think 50 quarterly results will bring in more credibility to the statement of a decade of a growth.
Interesting point you made, Feroz, is that, the possibility of overshooting that 1 lakh crore mark in terms of AUM, there's a high possibility, but yes, you want to underpromise. That's what you're looking at right now. But if that is the scenario, what is the downside risk that you as a company would prepare for then?
See, downside risks could be several, but I think all of those risks which we understand, because we have tried to build this business brick by brick. When you build a business brick by brick, you get time to correct yourself. Quite a few of our companions in the industry want to build it quickly, get private equity money, hire a lot of people, but you need for a company to do its mistakes. Since Mr. Raval joined in 2007 April, and now it's been the same, he's the longest standing large wealth management outfit CEO. We've built it brick by brick. So we've corrected and tried to manage each risk. Now, when we speak of risks, most analysts, when we went IPO, said that you will lose market share because direct mutual funds will become very popular. But in 2019, my net flow market share was 0.16. In 2021, we became a listed company. Where today the market share is 2.36%, more than 10 times market share increase. So whatever risk we see, we try and mitigate them, and that happens if you evolve a company rather than just build it quickly.
Okay. And what about the margins? Again, 45-46%, is that something which is sustainable, or do you see pressure or tailwinds from here on if you have to consider cost structure or even scale for that matter?
Because we've built a very simple business, margin at a product level will not shrink, because we try and make 14-15% for our clients, and we like to make 1.2% for ourselves. And I think if we are able to deliver 13 to 15% return to our clients, which we have, after listing, our mark-to-market gain has crossed 27,000 crores, which is greater than the assets we had when we went listed. So when we make profits of 13 to 15%, will we be able to sustain 1 to 1.12% yield? I think for the next 10 years, we can sustain. But when it comes to margin as a percentage of the total revenue, which is 46% incidentally now, will shrink, because we like to reinvest in our business to make sure that the sustenance of 20% growth for the next 10 years can easily be pocketed. So margin as a percentage of revenue could shrink because we want to reinvest in 3-4 different divisions to make our business so much more robuster than it is.
Okay. So when you're talking about different businesses in terms of penetration, what is going to be your client acquisition or retention strategy specifically with HNI or the ultra HNI segment? And are you targeting new client demographies or even geographies to that matter, which will probably impact your margins to one extent? And then the segments that could then drive growth for you?
Yes, again, our business is reasonably simple. If I take care of the client, the hypothesis is HNI and ultra HNI are the smartest people in India. My client is the smartest person. If I do well for him, both on return and risk, and in turn risk-adjusted return, he takes care of me. So he gives me references, he gives me more wallet share from another competitor of mine. So I only have to have a soul-minded obsession to do good for him. Then automatically I will do good. That's the hypothesis because he's a smart guy. He's not just emotional person, right? He's going to be mathematical as well. So coming back, how will we grow our business? Because I have 12,700 families. If I do good for them, if I created a great Jensen's Alpha risk-adjusted return measure, they start giving us references. So that's where you would see a sharp rise in our acquisition. And also in penetration. If you see one quarter as a proxy of penetration possibility in our business, in the quarter gone by, market sentiment has not been great. But our equity sourcing has doubled from 1,000 crores last year, same quarter, which was a great optimistic quarter. Last year, same time, we were very, very bullish. But this quarter, clients gave us more money. Why did they give us more money this quarter? Because you are giving them a risk-adjusted return significantly better than your competitor. So to answer your pointed question, I have to take care of the client and the client takes care of me.
Okay. In that scenario, how are you seeing the mix in terms of business vertical shift between private wealth, advisory, mutual funds, distribution, the B2B, the phygital? How does that evolve over time, number one? And two, of the growth that you've seen in AUM so far, what proportion are you expecting it to come from fresh net inflows versus the market appreciation?
I think there's so many questions intertwined into one. One is the B2B is a SaaS platform where there's for a fee we give our technology to independent financial advisor, which is called the OFA Omni Financial Advisor platform, which is growing slowly. And that's our subscription model. The other digital wealth business is done very well. And we are still in the experimenting phase and we are not looking at innovation in the digital. We are trying to see how you create how do you crack the code between a physical RM and digital and try and make it phygital. So we are still cracking that code and the team is doing beautifully in that interim point one. Then coming to what happens in terms of our projections because of geographical spreads and business verticals, I personally think that private wealth business, which is a flagship business, will continue to deliver that 25% and that will remain the flagship business. The digital will help us understand how to extrapolate that toward HNI and augment the RM to become more powerful. Like that Popeye example, when he eats spinach, he becomes more powerful. Our entire technology is to empower the RM to be more efficient rather than replace the RM.
Okay, Feroz, my last question. Strong profits, cash generation is also strong. What is your capital allocation policy from here on? Is it going to be reinvestments, buybacks, dividends? And secondly, any plans for inorganic growth? How are you looking at that?
So when it comes to our ROEs, they've been upwards of 40%. Now it's about 44, 45. ROEs are high. We would like to keep our ROEs high. We would want to give dividends. That's why you would see on an expanded capital, we have given a 6 rupee dividend in the interim. So that's one. Buybacks we have done. I don't think buybacks will be too many. Bonus we gave. The last time we spoke of bonus, the price was very similar, 3,400, 3,500 and gave a bonus. We wanted to have more retail participation, but that got undone, fortunately or unfortunately. So bonus, we've always believed in rewarding the shareholder and that should be on the cards, hopefully if the board thinks it's wise to do.
Okay, so that's going to be interesting to watch out for because return ratios, the moment they are high, investors are always happy. But thank you, Feroz, so much for joining us on the show. Always a pleasure to speak to you. That's all that we have, folks, on this edition of KYC only on NDTV Profit for your profit. Please stay tuned for lots more.
NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller citizens.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller citizen towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit. A story of change, a path to renewal, a leader reimagining her nation's future.
This will be my first official visit to India as the Prime Minister of Sri Lanka. So looking forward to participating in the NDTV World Summit, where I will have the opportunity to engage with global leaders and thinkers.
Catch Sri Lankan Prime Minister Harini Amarasuriya at the NDTV World Summit 2025, 17th to 18th October on the NDTV network. Presenting the all-knowing, all
Welcome, you're watching Your Money Matters here at NDTV Profit. I am Mahima Vachrajani. Today we've picked two very interesting topics. The first one being how any investor should be wary of investing in an NFO. And to discuss exactly this, we're joined by Kirtan Shah, who's the founder and CEO of Tuvanta Wealth, joining us now. Kirtan, hi, a very warm welcome to you, and thank you so much for taking out the time. You know, of course, my first question to you will be, I saw a video where you were mentioning as to how investors should be wary of investing in an NFO. Why is that, is my first question.
Mahima, thank you so much for having me on the show. Mahima, I think because the mutual fund industry has been around for quite some time, and in most of these categories, you have at least tens of funds with great performance history, and you can actually go back to and check why and how the funds have done when markets were good, markets were bad. You have a consistency to look at, you have a risk-adjusted data point analysis that you can do. And when all of these things are available, right? Why do you want to invest in a new NFO which typically will not have any of these things, and you are just taking a blind bet because probably the brand name is too strong for you to invest? So what I keep telling investors generally when I talk to them is that if there is an NFO which is coming out, which is not offering you anything new, and then there are existing opportunities in the same space already available where you can dig a little deeper and try and understand how the funds traditionally would have done, or rather have done, then why do you want to invest in an NFO? You have multiple other options to look at.
You know, exactly that, Kirtan. So even I was having a chat with a friend the other day. The idea is that none of these NFOs that have come out in the recent past have anything new to offer, right? The theme on the back end remains the same, which is already there in the already existing mutual funds. So if you can, you know, give our viewers a perspective as to how these NFOs are, you know, have nothing actually new to offer per se.
So Mahima, like you rightly said, most of these NFOs that are coming out are all absolutely the same thing bundled slightly differently, right? And hence, I typically believe that the only reason why you should typically go ahead and end up investing in an NFO when the NFO has something new to offer. Like say, for example, just because we are discussing this topic, let's take SIFs. Right now, SIF is a completely new offering in the MF space, which does not currently exist, and it is offering you something that probably you will have to invest at least 1 crore to take exposure in a product like AIF. Right, so you have 25% unhedged derivatives that the fund can actually invest in, and you don't have a mutual fund product offering this. Now, if this is something that is offered which is not currently available, then probably a certain section of the investor community may want to look at an offering. Now, having said that, it does not mean that probably because the product is offering something new, you should go ahead and invest. It should also end up solving a problem in your portfolio. Now, even if a new NFO comes out which is offering something new, but that is not a problem that your portfolio needs to solve for, then in that case also you don't need to invest, right? Like say for example, in SIF, of course there is a 25% unhedged derivative position that can be taken, which is not currently available. But the minimum ticket size in terms of investment is 10 lakhs. Right now, you have to understand whether that kind of exposure is okay or not okay for your portfolio, and is it solving a problem that your portfolio currently does not solve for. If yes, then you go ahead and invest. Otherwise, in most other cases, you remove the SIF aside, right? Like we are discussing, it's all the same thing bundled in a new gift wrapper.
Absolutely. And, just to extend that, my next question is that, a lot of people misunderstand that, a new fund offer is similar to an IPO, which is not the case, right? It's not exactly, like a new listing per se. So just want to give viewers a perspective about how NFO is not like an IPO, because at the end of the day, the NAV is something that matters.
I think you've touched a very interesting point, because I got a lot of comments when I put that video out saying, you are missing out on a great point that the NFO comes at 10 rupees. And what is very unfortunate that the investor community does not understand is that the NFO at 10 rupees solves no problem. Because what you have to understand is that in the world of investing, everything is in percentage term. So let's say, for example, if there is an NFO which comes at 10 rupees, and it has to go up 10%, right? The 10 has to become 11. Now, a lot of investors think it is easy for 10 to become 11 versus probably a 250 to become 275, which in percentage terms is the same 10%, but it's actually not that, right? A 250 will take the same opportunity cost for it to become 275, which is 10% returns, that a 10 rupee NAV will take to become 11. So I think it is completely futile to think that because the NFO is at 10 rupees, I am getting it at a cheaper price. It is like saying that a 10 rupee stock is cheaper than a 250 rupee stock listed on the exchange, which is no logical comparison as such, right? So don't look at NFO because you think that the NAV is available at 10 rupees. It actually is no sweetener in terms of an offer. And when you talk about an IPO is a completely different story. It's an existing company which has been working but not listed, and now it is listing to probably give an exit to a private equity investor or probably raise money to grow faster, right? It has nothing to do with how an NFO works. An NFO is a new fund that an AMC is offering, asking you to invest so that they can deploy that money as per the objectivity of the fund.
Okay. All right. Because new fund offer does not have any past record, just want to get a sense as to how much should investors weigh on the past performance before selecting a scheme?
So I think that's again a very interesting question, because past performance may not repeat, and that's exactly how you want to make sure that the investor community understands when they are investing, because the general problem is today when a retail picks a scheme that she wants to invest in, she look at the 1 year, 3 year past returns and then invest. The point is not that the past returns are good and hence you invest in that particular investment opportunity, but at least when you have a 10, 12, 15 years of horizon, right, that you want to invest for, and at the same time you have 10, 15 years of history of the fund which is available, then I think it only makes your job easier to understand. Because let's say, for example, from a viewer's perspective, let's say if you have a fund which has probably seen a 2000 fall in the market, it has seen a 2008 crash in the market, 2013, 2018, 2020, and the fund historically, given having seen all of these cycles, still have been able to beat the index, right, by taking lower risk, then I think that gives you far more confidence for you to be able to invest in that fund versus a fund which has absolutely no history to look back on. So my perspective of saying that you should have a history was in this context, so that you can understand whether or not the fund has actually seen cycles and what and how has the fund done in those cycles. I think that's a great value add when you have so many of such funds available versus wanting to invest in a fund which has none of these things to dip down on.
All right. Kirtan, the other aspect is that in the recent past, we've seen a lot of sectoral and thematic NFOs that have come out. Just want to give your perspective, just want to get your perspective on how dangerous these could be. Although in the past couple of months, we've seen the inflows in these thematic mutual funds go down, but NFOs have been subscribed quite a bit. Your view on this?
I think I have a very strong view, and I keep generally discussing this online, which is that whenever probably a thematic or a sectorial investment opportunity is made available to you, you've actually lost out on the cycle already, because most of these thematic funds are typically bought to the market when the cycle has already played out. So let's say you've had a 6 months, 10 months or a 12 months of a sector really doing well is when this thematic investment comes into picture, right? So while you invest in that thematic, please understand, because there is too much of noise around that particular sector and that sector has done really well, is where that thematic play has actually reached out to you. So there are two things. First, you are already probably late in the cycle. And second, at the same time, as a retail investor, you have to understand that whenever you are investing in a thematic play, you only need not get the entry timing correct, but you also have to get the exit timing correct, because thematic plays are extremely cyclical. If you don't get your entry as well as exit correct, then you probably are in a loop where you are going to continuously keep underperforming. So I think thematic and sectorial play is not for retail investors. It's more for sophisticated investors who know why they are investing in that particular sector and have a slightly better sense in terms of valuations of entry and exit.
Okay, fair point. Kirtan, any scenario where you think that NFO actually makes sense for investor, or not at all?
Like I said, if the NFO has to offer something completely new, is not existing in the market, you should definitely look at it. Point in case is the SIF. I think what is currently offered in an SIF is a very similar structure of what an AIF on a long short offers. But of course, because the minimum ticket size is 10 lakhs, your corpus in terms of existing investments have to be slightly higher to be able to take a bet on SIF. And because it is very personalized, it has to solve a problem in the portfolio. But largely having said this, I think SIF is something that definitely the investor community can look at.
Kirtan, the other aspect is, we who track the space closely know about how important it is to track the fund manager's performance as well. But a lot of investors out there are not aware of this. What would you want to tell them?
No, I think, there are, like say, for example, somebody like me looks at some 21 data points before we end up selecting or rejecting a scheme in which we want our investors to invest. Now, this level of sophistication in terms of selecting is not something that you will typically expect a retail to look at, right? So if you are a retail investor, ideal situation for you is to invest in an index, because it is extremely simple and you don't have to really bother about selecting one or two funds out of the bunch of 100 funds available in the market. So as a retail investor, all you have to do is control your behavior, look at investing for as long as you can, and don't get scared when the markets are dipping. Even if you do index, I think you will end up doing a much better job. Active is slightly more sophisticated in my opinion, and that is for people who are looking at alpha over the index, right? So as a retail investor, stick to index and make sure that you have a longer time frame in terms of investment.
All right, Kirtan, I think the conclusion of that chat is that, unless and until the NFO does not offer you something new which has already not been present in the mutual fund space, it doesn't make sense to invest in an NFO. Thank you so much, Kirtan, for taking out the time and, of course, giving us all those insights. All right, the other interesting topic that we're going to talk about today is cryptocurrency. Now, the kind of downfall we saw on Friday, and post that Bitcoin saw a gain of around 5% plus, Ethereum up almost 11% and 4% away from pre-liquidation levels as well, and that's seen on October 10th. Even in terms of the overall addition in terms of where the market cap is concerned, it's added around $550 billion since the Friday bottom as well. The understanding here is as to, if somebody has gone ahead and invested in crypto, what he or she should do. And to, exactly ask Karthik, to exactly ask this, we're joined by Karthik Jhaveri, who's the Director of Investments at Tanzan Capital joining us now. Karthik, hi. Thank you so much for taking out the time and speaking with us. My first question is to you is as to this kind of volatility we're used to, when it comes to cryptocurrency. But in the recent events, any particular trigger as to why that's happened?
So the triggers are different, but the reaction is always the same. So the thing is, what happens with cryptos, I mean, when you sort of compare that with the stock market, a 20% movement on the cryptocurrency is very easy on a digital asset. Let's call it digital asset to simplify things. It's very simple, very normal, very ordinary. So a little bit of negative news or a little bit of sentiment which might affect the dollar adversely automatically sends, shock waves. I mean, it's a ripple effect. It sends all those waves. Now, on top of that, what a lot of people do is they don't actually have the money. So what they've done is they've got $100 and then they take positions worth $200 and $300. It's called leverage positions, right? So then when you're already borrowing some amount of money and your base currency looks a little bit weak because of some geopolitical reason or because of an announcement that comes from a politician, what happens is the reaction is severe. And because the reaction that being severe, the losses can also be humongous, phenomenal, because in one day, if a commodity or if a stock or if a digital asset like crypto, if this goes down by about 15-20%, a lot of people are going to stand to pretty much wipe off their whole year's profit or maybe more. So that's the problem. That's the volatility factor. And this time it was leverage plus the statement that came in that China is going to be levied on 100% tariffs. And I mean, obviously, dollar gets a little bit, under duress, under a little bit of stress, and as a result of which, immediately the cryptos will also sort of react to it. So I think, we'll always know the reason later on, but this is typically what happens. Anyway, whoever is doing this thing should be very, very aware of the fact that a 20-30% move at any point of time is, quite expected. Also, remember one thing, it's run up quite a bit, right? It had a fabulous run, and after a run, a 20-30% correction, I think should have been expected anytime.
So then, Karthik, would you see the recent kind of bounce back as an initiation of a bull cycle, or this is still a speculative move that we can anticipate right now?
So the thing is, this is my personal belief that it's always been very speculative, because this is an asset which is not really backed by anything right now. Most of the governments don't recognize it. In India, we don't have so many options to even, execute these trades in a legal and, in a very financially accepted manner, so to say. But if you just look at purely from the chart point of view, and which is what you can only do here, then this kind of a reset is always some sort of a base setup for the next move. And till the time dollar remains under stress and till the time we have US economy under such huge amounts of debt, I would think that, cryptos and at the same time commodity and precious metals would always keep doing a little bit better, because there is so much of uncertainty and these things thrive on uncertainty.
Karthik, what about the kind of participation that India has in crypto? It's still muted, right, as compared to where the global participation stands. What are your thoughts on that?
So, like I said, there have always been talks of some app or the other, then it gets shut down, things get, and it's always very dangerous. But there is a beautiful way. I mean, if you really wanted to participate into these digital assets, then a beautiful way is ETFs which are registered on the American stock exchanges. Today, it is quite easy for us as an Indian citizen to open an account, which is a US dollar-based account, and by which we can buy, stocks that are listed in NYSE, NASDAQ, S&P, etc. And along with that, you get thousands of ETFs also that are listed. Now, out of those thousands of ETFs, you have at least a good, 40, 50, at last count, maybe 80 ETFs, which are dedicated only to crypto. Some of them are leveraged, some are not leveraged. There's a whole variety of that. There's a lot of choice available. It's a perfectly legitimate route of doing it. So if you want to do it, but then what happens is that there is a thrill of, owning a few units of that digital asset through your app, but then the app's legality itself is questionable. So rather you open an account which is all approved and through the bank channel transfer the money, money gets transferred in the American account. It's all just the way we do trading in Indian stocks. You can do the same thing in American stocks, just that you'll have to do that in the Indian, during the night time of India, because that's the time the markets are open there. So that's the only little challenge. But you can even put market orders and you can put, time-based orders, etc. So it's not so difficult.
Right, Karthik, I'm glad you mentioned about ETFs. Just want to get a sense as to how much of these rallies generally are kind of affected by the ETF flows, and how much of it is just retail speculation or retail trading is, what I would like to call it as.
See, I don't have numbers on the US market. If they were Indian numbers, I would still have a little bit better, tab on them. But my understanding from the people I speak to is that there is massive retail participation. So I would even hazard a guess of about 60-70% is retail participation. So there are very popular ETF platform providers like the iShares, the Vanguards, the PIMCOs. So they do this kind of ETF. I mean, Fidelity also does it. There's a whole lot of them. So like I said, all the big names that you can think of have already established themselves in the mutual fund space, in the ETF space, and they've also launched a whole variety of funds for being able to facilitate investments in digital assets. So you can do it across the board for a lot of that. But I would think largely that is retail participation, unless there are institutions who take asset calls, but they don't do that. Mostly it's for retail people and people like us from around the world who want to maybe participate into that digital, but don't have an identified or a regulated app or a regulated sort of a software platform through which we can place our execution trades. So then in the meanwhile, these ETFs become a great option.
Karthik, with regards to where the tax is concerned, how is digital assets taxed in India? Give the viewers that perspective. And do you think this is one of the reasons as to why people in India are not very enthused about going ahead and investing in crypto? Could be one of the reasons?
Not exactly, because see, cryptos are also taxed at 30% plus the surcharge and the surcharge depending on the slab of income that you fall in. The tax is 30%. It's the highest level of tax, right? Highest rate of marginal tax. But then, if that were true, people would not even dabble in futures and options in the Indian stock market. The futures and options in India also are taxed as business from the income from other sources. It is classified as a business income and you are taxed at the maximum rate. There is no discount or there is no rebate available there. So we have so many people participating that these days in most of the broker portals, you have that message that Sebi has been displaying, that 9 out of 10 people don't make money in futures. But despite that, there is enough participation, right?
Yeah.
So I don't think that tax is a deterrent. The tax is not the deterrent. A bigger deterrent is which app or which platform do I use by which I can make a legitimate trade, it's recognized properly, and it does not get me into trouble. And also there's a massive fear of whichever app you use getting hacked and suddenly you invest money and your money disappears. I mean, you don't mind the 20-30% fall, but what if somebody just stole the bitcoins or whichever other crypto coins you had in your digital wallet? If those go away, then that is a bigger risk. So I think that apprehension is very loud. It's very big, and I think that's probably one of the primal factors why people don't do it, why so many people don't do it, right? Tax, I don't think is an issue.
And because, you mentioned about how, a lot of these apps or platforms that offer crypto trading or investing in crypto have kind of shut down. What is the kind of regulatory measures, in your opinion, that government could take to curb this kind of shutting down of apps? Because at the end of the day, it is the Aam Aadmi that is getting affected and losing their money, hard-earned money.
So see, firstly, what happens is because this is now recognized as an asset, we will hope that at some point of time, the asset also brings regulation. See, firstly, we have to just step back and understand digital currency or digital assets were not even part of the Income Tax Act. So there was no mechanism of even doing anything on charging. I'm talking a few years ago. Then slowly this came in. Now there will be regulation to come and say that, okay, if you really want to do this, then these are the mechanisms and these are the regulatory do's and don'ts, and therefore companies can then invest and set up a platform to do this thing. And these will be mostly broking companies like, the leading banks that we have, the leading brokerage houses, the way they offer you today the options of, trading in, in equity, in derivatives, in currency, in commodities. In the same fashion, it's not a big deal for them to also include crypto. But when the regulator brings out a lot more, do's and don'ts in this whole space, that time we will see brokers and banks who are in this business giving us this opportunity to even invest in these things. Also, there needs to be settlement things. There are lots of issues there, and which is why, and it's not urgent. It's not a necessary thing. So therefore, it's not got the attention due.
Karthik, one last piece of advice that you would want to give retail investors out there who go ahead and take the risk of investing in crypto.
Don't do it. I mean, don't do it with only a very, very minuscule amount of your money. I mean, if you had to compare cryptos, then I would say versus cryptos, maybe consider doing futures and options against that. The risk level is the same, but at least it is legitimate. The money is there in front of you, and you might be able to take better calls, and information is so much more better available to you at your fingertips if you are doing speculative activities within India. So that's the thing. And if you must do it, and if you are interested, then I think go the ETF route. It's a much more sound, safe, and effective route.
Okay, so don't do ETF is the takeaway. Don't do crypto is the takeaway from that conversation. If you want to do it, choose the ETF route just for the thrill is what Karthik is indicating. Karthik, thank you so much for giving us those invites, and I think this is a much needed conversation for investors to be aware of. Thank you so much for giving us all those insights and of course taking out the time. Alright viewers, with that we're completely out of time on this edition of Your Money Matters, but do stay tuned, more news and updates on the other side.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investors is the correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller citizen towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit. A story of change, a path to renewal, a leader reimagining her nation's future.
This will be my first official visit to India as the Prime Minister of Sri Lanka. So looking forward to participating in the NDTV World Summit, where I will have the opportunity to engage with global leaders and thinkers.
Catch Sri Lankan Prime Minister Harini Amarasuriya at the NDTV World Summit 2025, 17th to 18th October on the NDTV network. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
At a time of global uncertainty, when leaders balance risk with resolve, the most definitive leadership conversation unfolds in New Delhi this October. Catch Prime Minister Narendra Modi defining India's moment in history. Harini Amarasuriya, Sri Lanka's Prime Minister, steering the nation from crisis to recovery. Rishi Sunak, the man who reshaped Britain's political narrative. Tony Abbott, bringing clarity to the geopolitics of the Indo-Pacific. Live and exclusive at the NDTV World Summit 2025.
If there was 1 year there we need a Saal Mubarak in the last 4 or 5 summers, I think this is it, right? So, Naye Saal ki Shubhkamnaएं, Nuttan Varsha Abhinandan, Happy New Year, whatever you call it. The question to Riddhham Desai is, will the new Samvat usher in a happy Indian equity investors and maybe for global markets as well, because he's a keen eye on the globe. And Riddhham, thank you so much, of course, for joining in as we do every year now for the last so many. And I wonder if a lot has changed between the last 5 months that we spoke 5 months ago and now, because the world still seems to be one tweet or a Truth Social post away from uncertainty. Is it possible to aspire a happy new year when such circumstances surround us?
First of all, to all your viewers, Shubh Deepavali and Nutan Varashna Abhinandan to the Gujarati viewers. And before I start, I want to tell your viewers that you did an amazing interview with Manish and Ramesh, and everybody should see that.
Okay.
That's a one-on-one on how to invest, because we may not get into that territory, but those are two geniuses from our stock market, and it was a brilliant interview, as you always do.
Thank you.
Okay, so yeah, the world, I mean, see, Neeraj, uncertainty is part of life. Okay, I will tell you something. When I was walking into this room, one of my colleagues walked past and she said, "Oh, so you're doing an interview?" I said, "Yes, maybe the last one of my life." And she said, "Why would you say that?" So I said, "This morning could have been the last one of my life." The point is, uncertainty is so underestimated. And we only feel it when it creates events around us. When we lose a near or dear one, when the markets move a lot. But life is uncertain. So there's nothing unique about the circumstances today. It has always been uncertain in the stock market. I think the epitome of uncertainty is the stock market, and it remains so. Do I have any idea what will happen in the next 12 months? No. Did I have any idea 12 months ago? No. What we do is lay down a framework so that you can think through it. And the most important thing that you can do is sit through that. Because sitting tight and doing nothing is the best way to accumulate wealth.
Okay. So
everything else is only going to destroy wealth. If you behave randomly to random events that are happening all the time, it's very hard to make money. Or rather, I shouldn't say make money, but very hard to create wealth.
That's true maybe for wealth, for life, everything. By the way, you had me scared for a minute out there. I was wondering, why is it that I've not had a chance to talk to Riddhham again? But okay, no. Well, long life, all 20 fingers crossed for that. Long period in the equity markets for all of us to gain from your wisdom. But so let's talk about the framework then, Riddhham. What's to your mind, the framework as we look forward to the next 12 months?
So the framework is as follows. Coming out of COVID, I think the government and the central bank tightened. And I'm referring here only to India right now. We'll come to the world a little later. Because of the fear that inflation will surge. It was the right policy to do. Because coming out of COVID, there was so much pent-up demand. It was likely that inflation would have surged. And my God, were they successful. Okay. Supremely successful. India came out of COVID with the least inflation problem relative to the whole planet. Everybody else was grappling with much more inflation, including China. So that was a hugely successful policy. But as usual, when you are very successful, it takes time to turn the ship. Right? The ship doesn't turn as quickly. The ship is of that nature. India is a very big country and you can't turn this thing around at will. And so we arrived in 2024, and because of extraneous circumstances, it was an election year, spending got curtailed, and we had a really bad monsoon, in terms of heavy rains. So by the September quarter, real rates were high, and the fiscal deficit was annualizing at 3.4%, down from 6, so it had halved. So invariably it caused the economy to slow. And I think a decision was taken that we need to pivot. It takes time to move the ship. The pivot happened in February with the RBI policy, and it has been followed by a cumulative interest rate cut, CRR cut, infusion of massive liquidity, deregulation of lending, and a big stimulus from the government, which is very sweet because it's not inflationary stimulus, but it's disinflationary. Nevertheless, all of this put together in stock market terms is what we call as reflation, which is India, after many years, is trying to get its inflation higher. So we've been in a disinflationary mode, policy mode, since 2014, because at the time we were running double-digit inflation, so we had to bring it down. It took many years for us to bring it down. And then it has gone and swung to the other side as it usually does. And now we're trying to reflate. Reflation is super good for equities.
Okay.
It's super good for profits, super good for revenues. So the one framework that people should have is that the next 12 months ought to be a whole lot better than the last 12 months. It'll be a whole lot better.
Okay.
Now the caveat is the world, so we'll come to that. But that's the framework. When the central bank is reflating, you don't fight it. It's stupid to fight a central bank that has got its foot on the pedal for reflation, and the government is cooperating with it. So it's a combined policy. And this is also being marked, almost not noticed, because I was meeting a set of institutional clients last week, and they're not even noticed the amount of reform that is happening at the state level. Just take the case of Maharashtra government. Okay. It has allowed labor to work longer. It has allowed establishments to be open 24/7, and it has launched a capital subsidy scheme for GCCs. You look at what Telangana has done to its electricity sector, and we don't have the time here to go through details, but the state level reform is at another level now. And I've been saying this, that there's only that much the center can do. Unless the states cooperate and also do their bit, it's difficult to lift this. But let me say this here, that we were running a template for 6.5% growth because we had to curb inflation. I think now the template has shifted to 8% growth. And I'm not don't get fooled by the real growth of the last quarter. It's nominal growth that matters.
Yeah.
So nominal growth with modest inflation is the mix for equities. So we're going into a period where real growth probably goes to 7.5, inflation goes to say 3.5 or 4, and therefore we have nominal growth of somewhere between 10 and 11, which will support earnings growth in excess of 15%. That, I think, is the framework for the next 12 months.
Yeah, but this is great if it happens, right? But we indeed see growth at 7.5. So you think this whole push of the central bank plus the consumption push that the government has given leads to that 7.5% growth? Or is there something else on the global side that needs to fall into place?
The world obviously is a messy place. I said that last year also, and I'll say it this year, and I'll keep saying this until it all falls apart.
Okay.
Because I don't know when it will, but it is heavily indebted. It is aging. And on top of it, we clearly have a crisis of confidence with respect to the medium of exchange or currency.
Yep.
So that is certainly brewing in the background. And this started with the reneging of contractual obligations that came out of the Ukraine-Russian war, and continues to be the case. And that's probably the reason why there is such a big bid on gold. You cannot actually just ignore that.
The one in 2022, right?
Yeah. So you cannot ignore the bid on gold, and it is clearly, I have a chart which I have been using for 25 years, which is Sensex in gold terms. It's gone like this.
Oh, yes.
Right? And you can buy, this is just about the least amount of ounces you get with the Sensex as you have in the last, say, 40 years, with the exception of the low in COVID, the low in 2008, the low in 2000. So those were all crisis moments. We have no crisis here. So we are kind of trading at crisis valuations, near about. In the equity markets, and it matters because somebody said, why would you measure this in gold terms? Well, it ought to be measured because gold is still the quintessential store of value. And therefore it is important to rebase all assets in gold terms. And very briefly, I'll say gold is not an asset. An asset, by definition, is something that yields an income. So equities, because it gives dividend; real estate, because it gives rent; fixed, bonds, because it gives you interest; a fixed deposit, because it gives you interest. Gold gives you nothing. It's a store of value. It can be a medium of exchange, but it's a very onerous medium of exchange. It's very hard to store and carry gold in your pocket and buy a cup of coffee with gold. And those things have not been done now for many centuries.
Yeah.
Right? It was at one point in time, gold was used as a medium of exchange. But today it is very hard. So, therefore, it's important to look at asset prices relative to gold or in gold terms, because gold is the quintessential store of value. It's no different from looking at the Sensex in dollar terms, because dollar is supposed to be a store of value, or INR terms, because INR is supposed to be a store of value. Well, it's not such a good store of value, but it is still a store of value. The INR that you're carrying in your pocket will have the same value tomorrow morning.
Yeah.
May not have the same value 1 year down from now, but it has the same value tomorrow morning. So there is some store of value. The stocks you hold in your portfolio may be down 20% in one day. So they don't have any store of value attached to it. So I think there is a lot of I would say difficulty in the global environment, which may feed into India's economy. India is not a small cap stock. It's a big country with it's a big player in the world with a growing trade with the world, and therefore will get affected by what happens in the world. For example, if the US goes into recession, we cannot come out unscathed. Our growth rate can't go to 7.5. There will be some impact, as it has happened in the past. The impact will be a lot less today than it has been in the past, but there will still be impact. So yeah, I cannot for sure say that the growth will be at a certain level, because I don't know how these global events pan out. I don't know how geopolitics pans out. But these seem to be less settled right now than we would have hoped for.
Okay, so the follow-up is, if the US economy doesn't go into a tailspin, but the US markets, led by the AI frenzy coming off, peter off, can Indian markets do well? Because I have now heard you say enough number of times that India is the low beta market. It'll do well, it'll do less well on the upside when everybody's doing well, but it'll probably do well when not everything is doing well, right?
Yeah.
In some sense. So can that happen?
Yeah, so this I will answer a question that you've not yet asked, is why foreign investors are not buying in.
I was going to come there afterwards.
No, because this dovetails into that.
Okay, let's
do
that.
So 3 reasons.
Yeah.
Right? One is that they still have a problem with India's absolute valuations. The relative valuations now are a whole lot better. 1 year ago, China was at 9x, India was at 20x. China is now at 15 times earnings, India is still at 20. So relative to China, India is more attractive than it has been for most of the last 25 years. In fact, relative to emerging markets as a cohort, India is more attractive than it's been for most of the last 25 years. Okay, so this is clearly now the relative valuation is good, but the absolute is still where it was. It has not moved a lot. I mean, earnings have not grown that much and share prices have not moved that much. So we're still dealing with a 20 handle on the earnings multiple. The second is that India has no AI trade.
Yes.
And especially in the last 6 months, the world has been all about the AI trade. And contrary to popular perception, the US markets have not done well.
As a full cohort. I mean, just
SPX has not done as well because SPX still has a large share of non-AI trades which have been dogs. Whereas markets with, a large proportion of AI trades,
Taiwan,
ex-Europe where defense has been the theme. So defense and AI have been driving a lot of markets up 20, 30, 40%. That's what markets are up in the last 12 months. And that's why it feels like India has been in a bear market. Because if you bought China, you'd be up 40% relative to India in US dollar terms. And the third reason, foreigners have not been able to participate is because the domestic bid doesn't go away. So they are up against domestic bid, which means they need to take share prices a lot higher before domestics actually offer stock. So that's the reason why foreigners have not been there. And this dovetails into your point, which is if at some point in time the AI trade unwinds, and mind you, if it's a crash like 2000, then all bets are off. No market can survive a crash like that. India will perform relatively better, but who cares? Because, things can be down 40%, India can be down a lot less, but it will still hurt, but India will outperform. If the AI trade wanes, then I think you will see both absolute and relative performance from India.
Okay.
And that is, I think, the key. So it is not about, and the second thing is also about growth, is that on its own, if India's growth improves, then it will offer a better opportunity, which I think is almost a given now, that India's growth will be a whole lot better in 2 quarters from now. I don't know about the AI trade. I have no expertise to judge when and where the AI trade pops and how it pops and where it goes. But that is another key.
Yeah, I think the two gentlemen you mentioned were also divided on that opinion, right, around whether it's a bubble or not. So it's completely fine.
Well, I can spend a minute on this.
Please do.
So I think embodied AI
is really good coffee.
Embodied AI is here to stay. That is not going to. That's not going to fade. I think it's a real thing. It's a real technology shift. It's like the horse carriage movement of the 1890s, when Ford brought the car into the U.S. markets, and horse carriage was the mode of commute in New York City, and in 10 years a large number of horse carriage families died in poverty if they refused to move or become a taxi driver or reskill. So embodied AI, I think, does present that challenge. It's probably not happening in the next 5 years, but 10 years down the line, I'll tell you the risk. It's not about our IT engineers. Our IT engineers are not at risk. Our IT engineers will build AI for the world. So this notion, I think it's just completely wrong that Indian IT engineers will be replaced by AI. What I worry about is the domestic helps. They can be replaced because the stuff that China is doing is, these domestic helps that they're creating as robots. You can abuse them. They don't need vacations. And most critically, they'll never ask for a loan. Now see, it solves for a lot of problems that we have while managing domestic helps. You can leave the house to them. There's not going to be any risk of anything getting lost. And they apparently will learn from how you do things. So you will not probably complain either on the quality of work that they do. And they won't be very expensive. The last thing I saw is retailing at 20 lakh rupees. And once this thing scales, it will become 10 lakhs. The households in India that afford domestic helps can easily replace them. Now that's a huge number of people out of employment. Out of employment in India straight away. So I do worry about that.
Okay.
Are we there? No, we're not there because it's not scaled. China will have to produce like 20 million of them just for India. And then India will have to agree to import them with low import duties. And then, you'll need a service network, etc., etc. So it'll take time, but we'll get there. So embodied AI is, I think, a risk, which is converting AI into a physical thing, whether it's driving a car, whether it's a domestic help, whether it is working in heavy industries, etc. LLMs, I'm not so sure. LLMs, I feel are like search engines. And it didn't really matter that India never had a search engine of its own. We all used Google free of cost, and it never hurt us. Okay, so the really advanced LLMs will have a subscription, but they'll be pretty accessible and we'll all be using them in 5 years. Everybody will be using LLMs, but they don't seem to be the threat.
Okay.
The threat is embodied AI. So that is on AI in my view, but again, we'll find out in the next few years. Now, is this a bubble or not? Well, things trading at 100 times earnings always smells like a bubble. Because when you do the math, something that has to be justified, this will have to grow 20-25% every year for the next 5-7 years, 10 years. Of course they can do it.
Yeah.
But the risk that they don't do it is also pretty pertinent. And that is the problem about buying stocks that are at high multiples, is that a delivery has to happen. And if you buy 20 stocks, you may still be fine because 5 of them will succeed, 15 will fade. And those 5 hopefully compensate for the 15 that go away. But if you buy 1 or 2 expensive stocks and it doesn't work because there is a failure in delivery, then you don't make money.
Okay. Depends on the size of the wallet, I guess, then, and how much you can diversify. Okay, great. But Riddhham, then, therefore, the key question, the FII client comes back when growth in India starts to move ahead, right? It has to be that.
3 things.
Necessary condition.
One is you need corporate issuances to start, because I don't think the domestic bid is going to go away. So somebody has to supply the shares that they have to buy. So that's a technical point.
So you're actually saying that's a good thing?
Oh yeah, it's a very good thing.
Okay, perfect.
It's a very good thing.
You isn't crying horse that arey kitna supply hai. You are saying acha hai.
No, supply has not got anywhere. I'll give you the stats. At the peak of the 07 bull market, supply reached 3% of GDP.
Okay.
In current terms, that's $120 billion. That's $10 billion a month for 12 months on the trot. We're not there anywhere close. We're not getting there in the next 3-4 years. There's not that much capital that corporate India can raise. Okay, so I think it's a long way. In fact, in an ongoing bull market, assuming this is midway through its life, so this is half life, it's good to have supply. And I think it tempers the price movement, and it brings a bit of stability to the market. So supply will allow foreigners to buy. Second is, of course, they'll want to see growth turn. There's a great deal of skepticism that this reflation will not work, which is a good starting point. Because if everybody was confident, then it would have been in the price. So it's not in the price. This is my judgment.
Sure.
But I can also see it in the relative valuations. I can see it in a host of sentiment indicators that I track, that things are not in the price. And the third thing is this AI trade. That will be a sweetener, icing on the cake.
Okay.
If the AI trade fades, I think almost everybody globally will look at India.
The interesting thing is, Riddhham Desai, in the last 20 minutes, you haven't once mentioned Donald Trump and the India-US tariff piece.
I don't think that's very critical.
No?
No. It's a sentiment thing. From a macroeconomic perspective, it's 1.2% of GDP, 1.3%, it's 2% of our workforce. Of course, there are certain MSMEs that are hurting, but it's not going to bring India down. It'll hurt us if it stays for a whole year, then 30 basis points of GDP. You've already offset that with a massive reflation.
No, but from the foreign inflow perspective.
So sentiment-wise, yes. If it happens, then people will get excited for a day or two, and then that trade will fade away. The real deal is if the growth data accompanies it, then it will sustain, and if some supply comes in, then it will sustain further. Now, see, from a stock market perspective, the foreign bid is not important. But from a macro perspective, or rather I should say it is far more important from a macro perspective than a stock market perspective. This is the opposite of how India used to be. just until 10 years ago, where the foreign bid was important from both angles. But now it is largely not so consequential for the stock market. It is far more consequential for the macro, because the foreign money that comes in on a daily basis gives flexibility to the central bank to manage forex reserves and liquidity. And if there are constant outflows, it just makes it more challenging. And I'll just add one more point to the foreign bid, which I should not forget, is the rupee is 5% undervalued on a real effective basis. So not only are the relative valuations on earnings here, the rupee is here. So if you are a foreign investor, you're going to get a double. Rupee goes back to fair value, that's 5%. Markets go up 10%, so you get 15%. Dollar returns look really attractive on a forward 1 year basis if you have that appetite. Most foreigners don't have a 1 year appetite.
Okay, interesting.
One more point on the foreign investors is that the whole thing, this selling, has got aggravated because of passive. So see, last year what happened was India's weight in the world and emerging market index went like this. It crossed China. Since then, because China has done so well, it has come down. Every time the weight goes down, passive money has to sell, because they have to reflect that weight. They're neutral, right? So passive selling aggravates this. The opposite happens once the market turns. So once India recovers relative performance to China, the opposite trade happens, and then it kind of becomes a virtuous cycle. So this is now far more exaggerated than it used to be in the past, because passive has become so big. So passive now controls the incremental share price momentum much more than it did in the past.
Okay, well, a lot of gems in this conversation. Riddhham Desai, thank you so much. This was truly special. Thank you for this lovely conversation.
Thank you so much, Neeraj.
Well, viewers, Riddhham Desai said that the Manish Chokhani and Riddhham Desai interview was the one-on-one on investing. Yeah, that's what I said, right? Manish Chokhani.
Riddhham Desai.
Okay, sorry. Manish Chokhani and Ramesh Dhimani interview was the one-on-one on investing. This one was truly exceptional as well. I hope you can go back and listen to this 2-3 times for multiple insights into investing and life. Thank you so much for joining in today.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller citizen towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit. A story of change, a path to renewal, a leader reimagining her nation's future.
This will be my first official visit to India as the Prime Minister of Sri Lanka. So looking forward to participating in the NDTV World Summit, where I will have the opportunity to engage with global leaders and thinkers.
Catch Sri Lankan Prime Minister Harini Amarasuriya at the NDTV World Summit 2025, 17th to 18th October on the NDTV network. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
At a time of global uncertainty, when leaders balance risk with resolve, the most definitive leadership conversation unfolds in New Delhi this October. Catch Prime Minister Narendra Modi defining India's moment in history. Harini Amarasuriya, Sri Lanka's Prime Minister, steering the nation from crisis to recovery. Rishi Sunak, the man who reshaped Britain's political narrative. Tony Abbott, bringing clarity to the geopolitics of the Indo-Pacific. Live and exclusive at the NDTV.
It's time for the big question here on NDTV Profit. I'm Vikram Oza. Yes, silver is shining. It's almost blindingly so now. The white metal's price rise is now steeper than gold. It's up 76% just this year alone in 2025. And over the last 3 years, it has zoomed up almost 3 times, which is about 185%. And we've notched up an unheard of single-day jump in silver prices of 11,000 rupees. So prices have rocketed to 1,69,000 rupees a kilo. Now the question is, what is driving it? Is it surging investor demand? Is it the global supply squeeze? Are there expectations of lower interest rates, which is actually pushing up silver prices? So behind the sparkle of silver lies strain as well, as we found out, because we've gone into the jewelry markets in Mumbai, and jewelers cannot seem to find enough of the metal right now. That's what we are coming back with. Imports are down 42%. Exchange-traded funds, ETFs, are hoarding record quantities now. Then they're creating a physical shortage that's pushing up spot prices for futures. But India is clearly the world's largest silver consumer. This silver frenzy is fast turning into a stress test for the market. But the question is this a genuine demand boom, or are we staring at a speculative blowout? And that's exactly the debate on the big question this evening: the great silver rush, real demand, or financial frenzy. And to talk about this, let's connect with our panelists. And joining us tonight, a great panel on this entire subject, the National Secretary of the India Bullion Jewelers Association, Surendra Mehta, is with us. Great to have you with us, Mr. Mehta. And also Navneet Damani is with us, the Group Senior Vice President at Motilal Oswal Financial Services. And along with him, we have Ajay Kedia as well. He is the Director at Kedia Advisory. Gentlemen, great to have you with us this evening. Let me start with you, Mr. Mehta. Why exactly are we seeing this kind of surge in silver prices? It is quite unprecedented and slightly unsettling, if I may call it so.
See, we'll have to understand one thing, that since last almost 5 years, the total silver production has always been short. So if I combine the last 4 years or last 5 years, you will find that there was almost 800 million tons of silver shortage vis-a-vis the production requirement, vis-a-vis the demand. So this was bound to happen at one particular time. So what happens is normally in the international market there have been paper trading has been going on, and this people who are doing paper trading have started marking the paper to a physical delivery. Now, once that started happening, what has happened is the spot prices went almost $3 higher than the future prices, which is normally not the case. Always future prices are a little higher than the spot prices, but it turned into a reverse, and that created a panicking situation. So so in a way, I can say that there is a shortage of demand in the shortage of supply in the international market. And why should a bank, who are the suppliers of the silver, will do such trade when you have to sell spot at a particular price and buy futures at a particular price? Because banks will never, banks would always sell at a spot and buy at a future price, and so they are losing money. In this case, the banks have been buying at $51 from the miners, and they have to sell at $48. So that is the whole game. And that is why there is a silver shortage across the international.
So you're calling this a game, Mr. Mehta. Navneet Damani, do you agree with Mr. Mehta's reading of the kind of price rise that we are seeing in silver? Because yes, there are tight global supplies. ETF inflows are hitting record levels as well. What's your own reading of the situation so far when you're seeing this kind of rise in silver prices?
Well, the fundamental story has always been good, and the problem is not the kind of price rally or price action we are seeing. It is a kind of ferocity or velocity in the price that we are witnessing. In 30 trading sessions, 40% upside is what is kind of people getting into a panic mode. And for the last 2-3 days, the buzz has been that there is acute shortage in the physical market, not only in the domestic front, but also globally. There are papers trading which have to deliver physical metal, and the metals and the warehouses have run out of metal. So there is a buzz of probable default or a probable carryover trade, which could kind of hamper the market. Overall, the situation has turned very critical over the last 1 week or so, when the prices have shot up very significantly. But I think the demand-supply gap still continues to remain there, and it has been there for the last many years. This is the 5th successive year where we are seeing a reasonable amount of deficit in silver, and the supply side story is not catching up to that fashion. The demand in solar panels, EV, and all these have been there, and they have been going around strong. But the supply coming in from silver mines, particularly from mines which are coming out of copper and zinc, have not been able to catch up to the similar fashion, and which is also adding to the kind of momentum. So not only gold, but also silver is getting benefit out of the safe haven category moment, which we are seeing, diversification of asset into financialization of what we are seeing. And also a couple of central banks have shown their intent to add silver as part of their portfolio to make it an entire package. And this is what is added to the thrust in silver prices over the last few weeks and months.
So indeed, Ajay Kedia, now there are several reasons to consider even right now when we are looking at silver prices and compare it to the kind of gold rush that we've seen in times in the past, especially this time of the year. For us Indians, buying gold during festive time is a huge thing. But this surge, compared to what you might have seen in 2011, in the year 2020, even if you take it back to the year 1980, this run somehow feels different. Ajay Kedia, what has changed this time in market behavior, in global demand? What exactly has changed?
Very good evening, Vikram, and happy Diwali to everyone. See, definitely the things has been totally changed. In 1980, there was a parabolic jump, and we know at that time Hunt Brothers had cornered silver, and because of that we have seen that rally, but that rally was not lasted for long. But there was a difference between 1980 to 2011, where we have seen structural bull run after financial crisis, what we have seen in 2008, but that also ran up to $50 and went down. See, in 1980 2011 there was very low or very negligible industrial demand, but this time since 2020, after COVID, we have seen tremendous rise in we can say investment in EV, solar panel, or industrial demand has increased very tremendously. As rightly Mehtaji has told, that output was stagnant and the rate was very low, but the demand has re-emerged very sharply. In last 5 years, what happened? To secure their silver, they started investing in ETFs, or we can say digital way of investing, and that has now started maturing, and that is why there is a strong deficit, and that has resulted in this rally. No doubt, with a rise of 70, 75, 80% YOY, there is a sense of some bubble, or we can say crash, but I think this is a structural bull run. There could be a correction of at least 15 to 18% after this FOMO settle down, because every FOMO has to settle down. So I think there could be a correction of 18-20%, which we sense in next couple of months. But definitely we expect this is a new rally, structural rally that can bring the prices to the new high of, let's say, 70, 72 also. But timing, yes, in a very short period, the rally has been then that was totally on a fundamental run.
Correct.
Physical requirement.
So it was very different. That's the contention that I was making. I wonder if you agree with that, Navneet Damani. Silver trading at a hefty premium over futures. Now one wonders if this rally is getting driven by this genuine supply squeeze. You're talking about a demand-supply mismatch, or is the scarcity pricing going speculative now? How much of this is speculation, like Mr. Mehta alluded?
Well, the spot to future discount, maybe eventually in the next 15 days or maybe 1 month, this will fade away. This is a momentary thing which is happening. And as we approach closer to the expiry of the contract, this will definitely go away. Other option is that probably supply would start coming in and probably people will start delivering, which will also make this premium go away. So I am not really worried about the cash to the spot discount which is prevailing in the market. But the real story is that this story is different than what we've seen in 1980 and 2011. In 1980, it was a couple of brothers who were getting cornered by the market, and that led to a massive spike in silver prices and then a fall in the prices. In 2011, it was more of helicopter money. It was more of financial money which was chasing two little commodities, and gold and silver both shot through the roof and then eventually corrected.
Yes.
But this time around, the entire narrative is very different. It is physical back demand which is driving these prices. It is lack of supply which is driving these prices, and it is not just in the US or maybe some part of the other world. It is across the globe that you are seeing this kind of movement happening, and that is why this story seems real, genuine, and maybe will be lasting for maybe another couple of years or so.
But Mr. Mehta doesn't agree, right? I mean, this is not as genuine as it's being made out to be. What's your understanding, Mr. Mehta? The silver to gold ratio, if you see that, it has shifted quite sharply in a span of weeks. So now one wonders if silver is truly becoming the new gold, or like we are suggesting over here, is this a bubble waiting to burst?
No. First of all, I never look at the gold-silver ratio. After the silver has been started, silver is being now used by the industries, especially in EV vehicles and solar panel.
Okay.
So I think comparing precious metal like gold to a silver is not correct at all. So I never look at gold-silver ratio. There is a fundamental demand of silver which has grown up, because in 1980 and 2011, there were no EV vehicles. There were hardly any solar panel where silver was being used. But now silver is used extensively by the industries for the industrial production. So we should not look at the comparison, or we should not look at the gold-silver ratio at all. In my view, the entire rally must be settling in another 20 or 25 days, since the spot and future ratio, which were $3 on Friday, the difference was $3, has now reduced to only $1. So in my opinion, maybe another 1 week or 2 weeks time, the entire shortage would settle, the prices would settle, and lot
Where
of
would they
supply
settle? Mr. Mehta, where do you see them settling now? If you're saying 20 to 25 days, where would they settle? So you are denying that this is a bubble that is waiting to burst.
No, I am saying that if the spot prices are higher and future prices are lower, bank would never trade this, because bank have to buy from the miners and sell in future.
That point is taken.
And that is why banks are not supplying to the in the open market. See, unless these ratios settle,
okay,
this shortage would continue. Once this ratio is settled, there will be no shortage.
Though you're saying that you do not believe in the gold-silver ratio, that's something that we've done by way of a comparison, because if you look at gold and silver prices right now, you can't deny the kind of mismatch that kind of seems to happen. And here's a time when investors are wondering how exactly should they look at gold and how should they look at silver. So let me go across to my colleague Shreyansi. She's here. And we are comparing how silver prices have been moving compared to gold prices. Shreyansi, if you can paint that picture for us.
Well, absolutely. And it's been a scorching rally to say the least. Let's take a look at some of the triggers. But before we do that, let's take a look at the prices and the kind of returns that you have for silver as well as gold. So on a year-to-date basis, 76% versus 55% is what you're looking at. So 76% for silver on a year-to-date basis, which compares with gold's 55%. On a one-year basis, 65% versus gold that has managed to remain pretty standard around 55%. Even on a one-year basis, 65% is the kind of return that you had coming in for silver for the last 1 year. And 3 year also, you've seen silver, in fact, outpacing gold. And that's something that you're looking at. Let's take a look at why this has really happened for the white metal as well. The first one on that list is increased industrial demand, and that's across sectors. You're talking about solar, EVs, as well as electronics, and you do have a solar boom as well. And that is, in fact, something that is power demand. Let's also take a look at some of the other factors. And what makes it to that list is limited imports as well as lower availability of physical bullion. So that is what you have, lower availability, that is also powering demand. Along with that, there's also high festive demand for silver coins, bars, and jewelry that you have for silver as well. And global supply, when you talk about the supply piece of the puzzle, in fact, it's struggling to keep up with demand, and you do have silver in its 5th year of supply deficits, and that, in fact, you can see reflected in the prices as well. Other than that, there's a de-dollarization trend, rate cut expectations as well, and lower interest rates also increase the opportunity cost of holding bullion as well as silver. So that is also one important trigger. But let's also talk to you about the brokerages and what they had to say. Most brokerages, in fact, targets have already been achieved, because the targets were ranging anywhere between $40 to $45 an ounce for the end of this year. And as you know, silver is around $51 an ounce already. So some brokerages, though, are expecting a pullback in prices by the end of 2025. In fact, to give you a little bit of a sense of what they're indicating, some analysts are also expecting 8 to 10% correction in the already volatile prices. So let's see how that really pans out for silver as well. But to talk to you about a very important ratio, gold-silver ratio, which is the ounces of silver that it takes to buy 1 ounce of gold. Now, currently, it stands at about 80.4. It previously hit a high back in April of 105, and the historical average ranges anywhere between 50 to 60. So that's what you're looking at. And when you talk about what this really means, it means that silver still has room to grow. It currently is undervalued, and there's a long way from here, even despite the rally that we've seen coming in for silver. So let's see what are the next highs that silver, in fact, manages to scale.
That's exactly what we are watching, Shreyansi. But comparison-wise, if you're looking at gold and silver, Ajay Kedia jewelers are saying, and we are speaking to them on the ground, that consumers are actually switching from gold to silver amidst all this frenzy. So is there a demand shift on the ground, or you think it's still investor hype?
So I think, see, as Mr. Mehta has rightly told, that now silver has been around 56% consumed in the industry. But what I see in ratio is economy versus economy, because whenever there is a threat in economy, definitely people will tend to go with the gold, and when economy is booming, then definitely silver will outperform, because it's 56% as an industry. 2 times in last 50 years, we have seen this ratio went beyond 90 level. Like in COVID, it was around 126, and rightly Shreyansi told around 107 we have seen in the month of April. But there is a still scope to go around, let's say 65, 60, which makes silver more attractive. And secondly, as we know that consumption, what Mehtaji has told, that last 10 years back, there was none of like EV, solar was there, industrial demand was negligible, or up to zero industrial demand was there. But in last 5-10 years, it has rapidly increased.
Right.
So I think, one more thing is continuously investment demand is also rising. So
Correct.
I think there is a scope for silver still from here also.
Right. So that's an important piece, and Mr. Mehta pointed it out as well. So when I turn that to you, Mr. Damani, when you're looking at the extended use of silver right now, when you're talking about solar panels and EVs, now the question is, when you see silver prices go up to the level that they are industry, is industry going to really pull back? Are they going to be looking for substitutes? Are they going to be pulling back on the kind of demand that they have for silver right now? What do you think they're thinking?
Well, definitely there is going to be some substitution because the kind of momentum and run-up that we've seen, of course, any industrialist will have to realign his cost structure and think of an alternate to silver. But what's the alternate? It could be either copper, it could be either aluminium to some extent, or maybe we'll have to switch to other kind of methodology, which is kind of not a very, very cost-conducive mechanism. So I think copper also has had its own share of run-up. It's up about 27% for this year, and the momentum and the trajectory for copper is also headed positive. So I think silver will be the preferred, but some bit of cannibalization or some bit of structure change could happen in the front of shifting from silver to other metals like copper and aluminium also. And these are not the best conductors of electricity to a very large extent. Aluminium is not the one which is the preferred one. But copper to a certain extent will have that kind of benefit because of the silver prices going up, and the next metal that you can bank on for the next 6, 12 months or 24 months could be investment in copper as a safe haven.
Copper is a good bet right now, looking at the way silver prices are moving. Now, that's an important piece, and we will, of course, keep tracking copper prices as they move along as well. Ajay Kere, I'll just come to you in a moment, but I just wanted to tell our viewers about our reporter having been down to Mumbai's Zaveri Bazaar. And there we're hearing that they're not taking any silver orders for Diwali because of the scarcity of physical silver. It is an unprecedented situation, and it perhaps tells us about the depth of this kind of rally that we are seeing in silver prices. But just listen in to what these jewelers have been telling us earlier today.
Considering the geopolitical tensions and the demand and supply issue with silver currently, they have come to know that there is a scarcity of physical silver in the market. Have you seen any such scarcity?
Yes, there is a real buying frenzy for the customers for silver. And this is not related to India only. This is around the world, Australia, Turkey, China. Everybody is going after silver right now. And there is a huge, huge demand and backlog of pending deliveries. So the shortage of silver is like enormous right now in the market.
So currently, are you taking any more orders or not?
No, because today I buy it on, I take order on the current rate. Tomorrow the rates are totally different. So we are not making money, and instead of that we are losing money in that case. So everybody's stopped taking orders.
Are you seeing any footfall of customers? Are customers coming to you and asking you about it?
Investment buying is taking leaps and bounds, but emotional buying has stopped.
So ornamental buying is not taking?
Not at all.
And do you see this problem getting resolved anytime soon?
Before Diwali or maybe around Diwali, things would subside and prices may tank.
So considering the the geopolitical tensions that are going on in the world, basically we are seeing that silver is being sold at a very high premium as compared to spot prices. So what are you seeing? What are you making of the situation? आपके आसपास क्या नजर आ रहा है इस वक्त?
We were expecting this to happen because the demand surged in last 1 month was so rapid that people at any cost and at any level want silver bars in their hand. So this was expected, and it came so fast that people are not able to grab now. Now the one who have left out, they have been just taking a chance at it, and anyway they get it. So the premium went almost to 30,000 last night. And I think by Diwali or by end of Diwali, we will be holding this rate so high. The premium will be holding so high because the demand is fabulous. The same is happening with gold. The same is happening with the entire jewelry industry. We were not expecting such a robust sale this Diwali, as the rates were shooting up every day, 2,000, 3,000. But suddenly, with the last 7-10 days, with the rates, the demand went so high that all the stockists are out of stock.
Stockists are out of stock, Mr. Damani. That is the kind of situation that is being painted. And Mr. Mehta, your reading of this, because there are jewelers who are seeing premiums of over 30,000 rupees per kilo on silver. Now, that is unprecedented. You tell us now whether this is about speculative hoarding at all, or do you think this is just suddenly demand shooting up like that jeweler was telling us?
No, this is basically, I would say, a FOMO. the premium has now reduced from 30,000 to almost 18 to 20,000 only.
Okay.
And this is, since the ETF also stopped, so a lot of people have started venturing into jewelry market to buy the silver. So naturally, nobody wants to miss this bull run, and nobody wants to miss the bus of silver. I always tell everyone that this is a very flickering commodity. Be aware. In Hindi, we call it a chanchal commodity. So the prices can go down by about 30 to 40% also.
Right.
But see, everybody wants to have a piece of cake out of this bull run.
Yes.
And that is why.
But the piece of cake is very obvious, Mr. Damani, when you talk about exchange-traded funds as well. So much so that these mutual fund houses are saying, no more, we don't want any more investments right now. So, I mean, how far can you hold back? What's going to happen with the exchange-traded funds? Everyone who's feeling FOMO right now is feeling like wasn't part of this bull run when silver has spiked so much. What do they do?
Well, you have to see that most of these ETFs are trading at least 7 to 9%, 10% premium than the current underlying price. So typically they have bought huge material over the last few days, and which has been priced at a higher NAV. So even if MCX or the current underlying price in the physical market goes up by 7 to 8%, this NAV will catch up, will happen in the ETFs, and there will be no kind of real return that will be available over the next 2-3 months till the both the prices matches towards parity. So I think most of the funds have stopped taking bulk money, but ETFs continue to trade where they are. We are reading it between fine lines that it's not ETFs which have stopped purchase. It is funds of funds who have stopped purchases and bulk purchases for these ETFs. So overall, my sense is that ETFs currently are trading at a very reasonable premium than the underlying price. So maybe one could look to exit ETFs for the next few months and probably price it at, or maybe re-enter once you get at a lower purchase. As Mr. Kedia was also suggesting that you've had reasonable run up, there could be a spark or there could be a reasonable correction in prices. So these are times when at a reasonable profit, you should be taking some bit into your pocket, some bit and holding into some position for a long-term basis.
Ajay Kedia was smiling when you said that. What's your sense, Ajay Kedia? Hearing voices from the ground, there is optimism, there is fear, there is frenzy. What is your call? Now that Zaveri Bazaar is reading this in the way that it is, that demand is going up, but there is no supply. So is retail sentiment getting carried away by the sparkle? What exactly are you thinking, and what do you think investors should be doing as we wrap this up?
So, Vikram, what I will do, I will clear it in 2 points. First of all, the alternate, like industry will use. So, I have just gone through the data, like copper was replaced by renewable energy, coal was replaced by renewable energy, copper was replaced by aluminium, lead was replaced by lithium. So, let's hope silver can be replaced by copper, has to see. But I have a ratio called silver-copper ratio. Both are industrial metal, let's say, put it in this way. Currently, the ratio is around 159, which is in last 10 years never hold above 150 level mark. That means this is the time when we use generally the demand shift from silver to copper. Last we have seen in 2020, we have seen in 2016 also. And recent rally in copper, what we have seen from 870 to 1020, that clearly shows copper should be outperforming. So I think there could be a chance we can see stagnancy in silver prices from the industrial demand if technology supports. Secondly, the current situation, I think FOMO is really going on. Everybody wants silver. It's a not a poor man gold now. It's a costlier affair right now. Still looking to the current fundamentals, we still expect 70-72 could be possible unless and until any other solution comes. But from here, definitely I would stay away. At least a correction of I am expecting around 18 to 20% because just Mehtaji has told Chandi Chanchal hai. So we see general this type of volatility. So I think stay away. Currently don't, if you want to consume silver, like on auspicious day, definitely go with the gold and silver. But if you are investing, stay right now calm, get it corrected or consolidated, then come back to silver again.
This is sage advice coming from our experts. Thank you very much for putting the silver rush, as we are calling it, in perspective for us. We'll see exactly where prices settle, because like Mr. Mehta pointed out, that this isn't going to be a long rally. This is going to be something that will kind of peter off, and perhaps this is going to be a temporary phenomenon. That FOMO is only natural. When you see prices zoom up the way they have, you feel, why were you not part of that bull run? It happens in equities, it has happened in gold, but this is unprecedented, the kind of price rise that we're seeing in silver, which is why this big discussion on the big question. But thank you, my guests, Surendra Mehta, indeed Mr. Damani and Mr. Kedia. Thank you very much for joining us on this edition of The Big Question. And yes, that's a wrap on the show, but of course we will keep asking the big questions as we go deeper into the festive season. How is consumption picking up, and how exactly is demand really pairing up with the supply in various commodities, including gold and silver? That is top of mind. I'm Victor Moza, from me and the team. Thank you, Need, for joining us. Good evening.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. But first up, let's see how the markets have fared today. So benchmark indices pared most of the early morning gains to end in the red, as you can see. While the Nifty has managed to trade above 25,100 level, IT has ended almost flat but with a negative bias. So the 30-pack Sensex has lost over 280 points to settle slight above the 82,000 mark. On the other hand, Max Health, Wipro and Tech Mahindra were the top gainers, in the Nifty basket. Dr. Reddy's, BEL and the TCS were among the top losers there. Now let's just shift our focus to HCL Tech, which has reported an inline performance for the second quarter, staying largely within the market expectations. So the company announced a $2.5 billion mega deal, marking a strong 42% quarter-on-quarter growth in its total contract value HCL Tech has revised its lower end of the service revenue guidance, which is now projecting growth between 4 to 5% and is significantly up from the earlier 3 to 5% range. So from both the EBIT and overall revenue guidance, they remain unchanged, reflecting steady business momentum there. Also, attrition has held stable at 12.6%. This is showing improved employee retention trends as well. Let's also keep it going with the earnings. It's been a strong second quarter for Anand Rathi Wealth with steady growth across the key metrics. Revenue has risen 8.4% to 297 crore rupees compared to 274 crore rupees a year ago. So the company's asset under management also saw a healthy 22% year-on-year rise. Now EBITDA stood at 137 crore rupees, up 6.6%, though the EBITDA margin eased slightly for the company, down 78 basis points to 46.17%. Net profit has climbed 5.8% to 99.35 crore rupees, while the profit before tax came in at 134 crore rupees, which was up 6.3% year-on-year. So the company has also declared an interim dividend of 6 rupees per share. This is underscoring confidence in its performance. Next up, we have Landmark Cars, which has reported a solid performance in the September quarter. They came out with their business update yesterday. Now, this is boosted by festive demand and price cuts. So, vehicle sales have surged 35% year-on-year to 1,403 crore rupees, while after-sales spares and other revenue has risen 10% to 252 crore rupees. So, total revenue for the quarter climbed 30.5% to 1,655 crore rupees, and this is reflecting a strong momentum across the big business segments there. So the company is also expanding its partnership with Mahindra with a new outlet opening in Hyderabad to strengthen its retail footprint. Just Dial has also reported a weak second quarter with collections slipping 1.9% year-on-year. So margins were under pressure due to higher employee expenses and also increased advertising cost, while the top line growth was primarily driven by volumes and realizations. So despite the weak quarter, Nuvama continues to maintain a buy rating on the stock with a target of 1,200 rupees and also citing long-term potential for the counter. The Supreme Court is set to urgently hear Roche's plea against Natco Pharma likely later this week on Thursday or Friday. So Roche, the maker of Risdiplam for spinal muscular atrophy, which has moved the apex court to stop the Natco Pharma from launching a cheaper generic version in India. So earlier, the Delhi High Court allowed Natco to proceed with its launch, prompting Roche to actually escalate the matter to the Supreme Court on grounds of the patent infringement. Now, the case highlights the ongoing tensions between intellectual property rights and also affordable medicine access in India. SG Finserv is undergoing a major leadership reshuffle with the CEO and CFO stepping down. So Saurabh Dhawan, CEO, has resigned effective November 3 and will be succeeded by Vinay Gupta. Meanwhile, Sahil Sikka, CFO and COO, has also resigned effective December 31, and with Sanjay Rajput, all set to take over as the new CFO. So these changes mark a significant broad-level transition as the company prepares for its next phase of growth. Let's also shift our focus to the EMS space now. With the Q2 earnings season kicking off, PL Capital has released a report outlining their expectations for the quarter. Now, along with their top stock picks in the sector, the brokerage expects Kane Sirma and Avalon to continue the momentum. Now, they are also penciling in the pickup in the order book across the companies. Now, on to an interesting update. Then Fredon Pharmaceuticals has launched Gen biscuits for dogs, marking its foray into the branded pet products. The company plans to shift from OEM to branded offerings by 2029 and also aiming for higher margins and stronger brand presence. So segments like pet care, nutraceuticals and also mobility are projected to see 35 to 40% CAGR, and this is also signaling a robust growth potential. IRDA has reported a robust second quarter with revenue rising 26.2% to 2,057 crore rupees from 1,630 crore rupees a year ago. So net profit has surged 41.6% to 549 crore rupees, which is up from 388 crore rupees in the same period last year. So net interest income, that is the NII, has also, seen strong growth, which has climbed 49.4% to 817 crore rupees versus 547 crore rupees year on year. So results underscore IRDA's solid momentum in the renewable energy financing and the sustainable growth space. Next up, we have LG Electronics, which has made a blockbuster stock market debut today in India. Now, the shares have roared out of the gate with a massive 50% premium over its IPO price. Now, they opened at 1,710 rupees on the NSE and 1,715 on the BSE. So this is up from 1,140 rupee, the issue price. So rewarding investors after an oversubscription frenzy of 54 times. So the premium listing is a nod to LG's dominant slice of India's booming consumer electronics market, where demand for smart appliances is skyrocketing. So no new cash for expansion here, but the listing unlocks value for the Korean parent while signaling rock-solid confidence in also India's middle-class spending power. Now on to the brokerage verdict for the blockbuster listing of the day. Brokerages have set a target price for LG Electronics in the range of 1,700 to 1,850 rupees. So MOSL highlights strong return ratios, while Ambit expects GST cuts to support the growth and also premiumization to boost the margins. Nomura whereas anticipates that an improvement in EBITDA margins and also reflecting better profitability in the coming quarters. Tata Investment Corporation has executed its first ever stock split today. So this sparked a head-scratching 90% plunge in the share prices that has nothing to do with the company's health. It's all optics. So pre-split shares closed at 9,922 each. Post-split, they opened at 1,042 rupees, adjusted for 1:10 ratio, where 1:10 rupee face value share becomes 10:1 rupee shares. So this boosts actually, liquidity, and also making the stock cheaper and easier to trade, potentially drawing in more retail investors without changing the market, the overall market value of holdings. So experts urge the shareholders to stay calm. If you held one share before, you now have 10, worth the same total. So it's a non-event designed to fuel growth, not a red flag. Now it's time for an NDTV Profit exclusive, viewers. Sebi is mulling a big shake-up to cool down the frenzy around weekly options trading. So the plan is to phase out these short-term contracts through a gradual sunset clause to settle the existing trade smoothly. Now this comes as Sebi worries that retail traders dominate this $4 trillion market, which is driving the volatility and the losses. So a consultation paper is due in 2 to 3 months, which, with changes unlikely before next year. So despite the weekly options pumping up securities transaction tax revenue, it's a bit to refocus the derivatives on their original purpose, which is protection and not gambling. Okay, so silver prices in India took a breather today, slipping from their recent record highs as investors cashed in profits and the multi-commodity exchange hiked margin requirements. Now, after hitting a peak of 1.46 lakh rupees per kg last week, December futures have dropped by 2.36%. Analysts point to profit booking after a stellar rally fueled by global safe haven demand and a weaker rupee. The MCX moved to raise margins by 33% from 15,000 to 20,000 per lot, which actually aims to curb the excessive speculation around, especially after silver has surged 59% this year, outpacing gold. So globally, spot silver also eased to $51.82 per ounce from a high of $52.12. Now, India's retail inflation has plunged to a 100-month low of 1.5% year-on-year in September 2025. But according to Bank of America's analysis, now this is mainly due to sharp drops in the food and beverage prices, especially vegetables and pulses showing deeper deflation. Now, BOFA says that this low print isn't from the recent GST tax cuts. With prices staying tame, BOFA predicts CPI will actually hover below 4% through the rest of 2025. Now, this is paving the way for the Reserve Bank of India to actually ease the rates further. Now, it also expects 225 basis point cuts in December and February meetings. So, looking ahead, October CPI could actually dip even lower to 0.5% year-on-year. So, which will be the series lowest. So, BOFA has also trimmed its FY26 inflation forecast to 2.8% from 3.8%. This is also signaling a softer economic landing and also more room for growth boosting policies amid this cooling price pressures. Now, in a major push to tap into India's booming digital economy, Google has pledged over $10 billion to build a massive data center in the country. Now, this investment announced on October 14 marks one of the tech giant's largest commitments in Asia outside China. It focuses on the facility in Navi Mumbai to handle surging demand for cloud services and AI tools. With India's internet users expected to hit 900 million by 2026, the center will store and process the data locally, cutting delays for users and also complying with growing data privacy rules. Google's India head called it a game changer for businesses. Now, this also builds on their prior $3 billion in local investments for mapping payments and also developer support. Speaking on Google's massive investment, Andhra CM Chandrababu Naidu has credited PM Modi's vision for luring giants like Microsoft to Hyderabad and also now Google to Vizag. So this potentially acts as a key to hitting Viksit Bharat by 2047 through AI. IT Minister Ashwini Vaishnav said that it will fuel the India AI mission and also scale up our IT pros. Now, he also eyes Andaman as a strategic undersea cable hub to ease Singapore's congestion with full government backing for investors. Now, in a big win for India, 70 million EPF subscribers, the Employees Provident Fund organization has overhauled its partial withdrawal rules to make them simpler and more flexible. So gone are those days where 13 tangled provisions were there. Now the merged into 3 easy buckets. So which is essential needs, housing needs and special circumstances, allowing up to 100% withdrawal of your full balance. Now, no more strict limits. Education pulls up 10 times, marriage 5 times, and just 12 months service needed across the board. So under special circumstances, skip the explaining reasons like calamities or the unemployment. No documents required, cutting rejections and also hassles. To protect your the nest egg, 25% of contributions stay embarked as minimum balance for compounding at 8.25% interest. Plus, the auto settlements also go digital and paperless. Now, in a shocking news from the crypto world, a prominent cryptocurrency CEO was found dead in his Lamborghini. Authorities are investigating this incident, which comes in the wake of a severe market crash that sent shockwaves through global crypto markets. Now, in a game-changing move from Mumbai's hard properties owners and also businesses, the Maharashtra government's revenue department has actually scrapped the old rule tying document registration to your local area stamp office. So this means now anyone in Mumbai city or the suburbs can actually head to any of the 6 convenient stamp offices across the city like Borivali, Kurla, Andheri, or the main ones near the old custom house to actually get papers like sale deeds, rental agreements, wills, and also inheritance documents stamped and sealed. Now, no more trekking across town or waiting in queues based on your PIN code. So this flexi system slashes the red tape, speeds up approvals, and also ease the daily grind for millions juggling real estate deals in India's financial capital. Delhi's ambitious drive to cut vehicle pollution through electric vehicles has hit a major roadblock. A stalled subsidy scheme leaving 26,800 owners out of pocket by nearly 42 crore rupees all because the government's 2020 EV policy has not been updated in 5 years. So the old rules offer up to 30,000 rupees off two-wheelers, 1.5 lakh for four-wheelers, plus waivers on registrations and road taxes, but without a fresh policy. Claims are piling up and processing is crawling at a snail's pace. So this glitch is frustrating early adopters who switch to EVs expecting quick rebates. Now, in response, the Delhi government is rolling out a new digital platform to verify and disburse the subsidies faster, aiming to revive the momentum. Now, the World Health Organization has sounded a global alarm over 3 Indian-made cough syrups contaminated with diethylene glycol. Now, this is a deadly toxin linked to kidney failure and the tragic deaths of at least 19 children in Madhya Pradesh this year. So this is also a part of the grim pattern echoing over 140 child fatalities worldwide from similar Indian syrups since 2019. So the tainted batches are Coldriff from Stressin Pharmaceuticals in Tamil Nadu, now Respi Fresh TR from Rednex Pharmaceuticals in Gujarat, and Relife from Shape Pharma in Gujarat. Now all of these are marketed for cough, flu and colds but sold only domestically so far. India's drug regulator has flagged the issue after tests have revealed DG levels up to 48.6%. Now, this is prompting the arrests like Srisan's owner and also license cancellations amid 364 manufacturing violations. Now, WHO is urging health authorities everywhere to screen the oral meds from these firms rigorously, report the detections immediately, and also close the regulatory gaps in the DG testing for local drugs. Global pop sensation Ed Sheeran is set to feature as the face of Barcelona ahead of one of the football's most iconic fixtures, El Clasico. The English singer, known for his chart-topping hits and massive fan following, will appear in promotional campaigns as Barca prepares to take on their eternal rivals, Real Madrid. Now, this unique collaboration bridges the worlds of music and football, aiming to excite the fans and also bring a fresh, star-studded spotlight to the historic clash. With both the pitch and the pop world buzzing, this El Clasico promises drama both on and off the field. With that, viewers, it's a wrap on this edition of Market Express, but please stay tuned to NDTV Profit and don't go anywhere.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together.
if there was 1 year there we need a Saal Mubarak, in the last 4 or 5 summers, I think this is it, right? So, Naye Saal ki Shubhkamnaएं, Nuttan Varshabhinandan, Happy New Year, whatever you call it. The question to Riddhham Desai is, will the new Samvat usher in a Happy New Year for Indian equity investors and maybe for global markets as well? Because he's a keen eye on the globe. And Riddhham, thank you so much, of course, for joining in as we do every year now for the last so many. And I wonder if a lot has changed between the last 5 months that we spoke 5 months ago and now, because the world still seems to be one tweet or a Truth Social post away from uncertainty. Is it possible to aspire a Happy New Year when such circumstances surround us?
First of all, to all your viewers, Shubh Deepavali and Nutan Varashna Abhinandan to the Gujarati viewers. And before I start, I want to tell your viewers that you did an amazing interview with Manish and Ramesh, and everybody should see that.
Okay.
That's a one-on-one on how to invest, because we may not get into that territory, but those are two geniuses from our stock market, and it was a brilliant interview, as you always do.
Thank you.
Okay, so yeah, the world, I mean, see, Neeraj, uncertainty is part of life. Okay, I will tell you something. When I was walking into this room, one of my colleagues walked past and she said, "Oh, so you're doing an interview?" I said, "Yes, maybe the last one of my life." And she said, "Why would you say that?" So I said, "This morning could have been the last one of my life." The point is, uncertainty is so underestimated. And we only feel it when it creates events around us. When we lose a near or dear one, when the markets move a lot. But life is uncertain. So there's nothing unique about the circumstances today. It has always been uncertain in the stock market. I think the epitome of uncertainty is the stock market, and it remains so. Do I have any idea what will happen in the next 12 months? No. Did I have any idea 12 months ago? No. What we do is lay down a framework so that you can think through it. And the most important thing that you can do is sit through that. Because sitting tight and doing nothing is the best way to accumulate wealth.
Okay. So
everything else is only going to destroy wealth. If you behave randomly to random events that are happening all the time, it's very hard to make money. Or rather, I shouldn't say make money, but very hard to create wealth.
That's true maybe for wealth, for life, everything. By the way, you had me scared for a minute out there. I was wondering, why is it that I've not had a chance to talk to Riddhham again? But okay, no. Well, long life, all 20 fingers crossed for that. Long period in the equity markets for all of us to gain from your wisdom. But so let's talk about the framework then, Riddhham. What's, to your mind, the framework as we look forward to the next 12 months?
So the framework is as follows. Coming out of COVID, I think the government and the central bank tightened. And I'm referring here only to India right now. We'll come to the world a little later. Because of the fear that inflation will surge. It was the right policy to do. Because coming out of COVID, there was so much pent-up demand. It was likely that inflation would have surged. And my God, were they successful. Okay. Supremely successful. India came out of COVID with the least inflation problem relative to the whole planet. Everybody else was grappling with much more inflation, including China. So that was a hugely successful policy. But as usual, when you are very successful, it takes time to turn the ship. Right? The ship doesn't turn as quickly. The ship is of that nature. India is a very big country and you can't turn this thing around at will. And so we arrived in 2024, and because of extraneous circumstances, it was an election year, spending got curtailed, and we had a really bad monsoon, in terms of heavy rains. So by the September quarter, real rates were high, and the fiscal deficit was annualizing at 3.4%, down from 6%, so it had halved. So invariably it caused the economy to slow. And I think a decision was taken that we need to pivot. It takes time to move the ship. The pivot happened in February with the RBI policy, and it has been followed by a cumulative interest rate cut, CRR cut, infusion of massive liquidity, deregulation of lending, and a big stimulus from the government, which is very sweet because it's not inflationary stimulus, but it's disinflationary. Nevertheless, all of this put together in stock market terms is what we call as reflation, which is India, after many years, is trying to get its inflation higher. So we've been in a disinflationary mode, policy mode since 2014, because at the time we were running double-digit inflation, so we had to bring it down. It took many years for us to bring it down, and then it has gone and swung to the other side as it usually does, and now we're trying to reflate. Reflation is super good for equities.
Okay.
It's super good for profits, super good for revenues. So the one framework that people should have is that the next 12 months ought to be a whole lot better than the last 12 months. It'll be a whole lot better.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit. A story of change. A path to renewal. A leader reimagining her nation's future.
This will be my first official visit to India as the Prime Minister of Sri Lanka. So looking forward to participating in the NDTV World Summit, where I will have the opportunity to engage with global leaders and thinkers.
Catch Sri Lankan Prime Minister Harini Amarasuriya at the NDTV World Summit 2025, 17th to 18th October on the NDTV network. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore.
Nifty manages to close above the 25,100 mark. Benchmarks fall for the second day in a row. Nifty PSU banks fall over 1.5% for the day, emerging as the top sectoral loser. Tech Mahindra shows a solid QOQ growth in revenue, net profit and EBIT with a notable improvement in margins. Revenue increased by 4.8%, net profit grew by 4.7%. IT services company Persistent Systems reports a net profit of 471.47 crore in its second quarter, up 45% on an annual basis from 324.99 crore in Q2 of FY25. Adani Enterprises partners with Google Inc. through its joint venture Adani Connex to build the largest data center campus outside the US. Bumper listing for LG Electronics lists at a 50% premium over the issue price. Brokerages pencil in targets ranging between 1,700 to 1,850 rupees. With its surge in popularity and riding high on its Make in India motto, what's next for Zoho Corporation? NDTV Profit's managing editor Tamanna Namdar discusses all of this and more with Sridhar Vembu, co-founder and chief scientist of Zoho Corporation. Sebi deliberates a plan to phase out weekly options as the capital market regulator grows increasingly concerned that these contracts are no longer serving their intended purpose of hedging and have instead become tools for short-term speculative trading. Hello and welcome. A very good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour of this show, we'll bring you the latest on markets as well as national and international news. Let's begin with shifting our focus first to the Tech Mahindra results that were just announced a couple of hours before. Tech Mahindra has released its Q2 results for FY26. Although the company's profit is up about 5%, it missed estimates. Meanwhile, revenue was up 4.8% and EBIT rose by 15%. I will soon have my colleague joining us now on the phone line to break down these numbers. But just to reiterate and take you through those numbers again, the revenue, which is the top line of the company, has grown by about 4.8%. Net profit, that's the bottom line, has grown by 4.7%, so very close to the revenue. The EBIT has grown by 15%. That shows operational efficiency for Tech Mahindra this quarter, the quarter gone by. And the margins have come in at 12.1% versus 11.1% the previous quarter. And to help us understand and dissect all these numbers, I have my colleague Jasmeet joining us on the phone line, who tracks the space very closely. Hi, Jasmeet. Take us through the numbers once again and tell us what this means for the company.
Well, right, thank you for that. If you look at the overall revenue picture, it's up 4.8%, which clearly beats the estimate, where it was expected to rise by 3% Well, on the other hand, EBIT was expected to rise by 10%, but we see an uptick by 15%, which is again positive for the company. On the other hand, the positive one would be the EBIT margin. We see expansion of 107 basis points versus the estimates of 75 basis points. But we see a miss in terms of net profit, given the net profit was expected to rise by 13%. And we see a rise by basically 4.72%. Now, to quickly sum up and give you all the 5 key takeaways from this particular result would be margins beat the estimate while the profit misses the expectations. On the other hand, this constitutes to be the 8th consecutive quarter of margin expansion. We also see that the CC growth is highest in last 10 quarters, currently at 1.6% positive versus negative 1.4% in the Q1. While lastly, the communication segment sees a downtick in this particular quarter. Given the communication is the biggest segment of the company, it sees a downtick by 2%, but the management restates that they have maintained a stable deal win in this particular segment. Overall, the attrition remains stable. We see a slight uptick by 2 points at 12.8% versus 12.6% in the previous quarter. So all in all, a good set of numbers, but we see a slight downtick in the net profit coming on the back of reduction in the other income.
Okay, all right. So just to again reiterate those 5 key takeaways for the benefit of our viewers at the moment that Jasmeet highlighted. Number 1 being that the margins beat estimates, but profit misses expectations. Number 2, this is the 8th consecutive quarter of margin expansion. CC growth was the highest, that is constant currency growth was the highest in the last 10 quarters, coming in at 1.6% versus minus 1.4% in Q1. Communications segment sees a downtick this time, but the company has maintained stable deal wins. And the last point being that he highlighted was the LTM IT attrition came in at 12.8% versus 12.6% in Q1. To have a conversation about the results, along with Jasmeet, I have Sushovan Nayak, research analyst at Anand Rathi Institutional Equities. Thank you so much for joining us, Sushovan. My first question to you is, how do you read the numbers and what this means for the company going ahead?
Hi, is my voice audible?
Yes, you are audible. Please go ahead.
So, I think it's a very good set of numbers, almost a 1.6% CC growth. I think that's much better than street expectations because that was in the 0.5 to 1% range from a CC perspective sequentially. And even if you look at the margins, we had expected a 50 bips margin expansion, but that has been 100 bips. Even from a deal wins, it's been great, $816 million. And possibly almost 35% YOY growth here. The only point is, I think the growth that is coming 1.6% CC that has been driven, the IT part of it is 1% QOQ, while the BPO part of it is basically 3.2% QOQ. So the growth has been driven by the BPO segment to a larger extent. The other bit also was, if you look at the headcount, I think the growth in the headcount in the BPO is from 60K to almost 66K, while in IT the headcount has actually declined. So those were just my initial observations on the numbers as such.
Well, right, yeah, thank you for that, Jasmeet Singh joining in. I would like to understand now, given the on-site overall percentage of this particular quarter has increased from being maintained at 21% in the previous quarters. So do you see this impacting the margin going ahead? Well, secondly, I would like to understand, given the management's target of reaching 15% by FY27, and we already see the expansion going well in hand, but a slight impact on net profit. So what are your views on the overall profit impact?
No, I think it's just a marginal increase that is fair. It keeps on happening depending upon the demand requirements in the on-site or the offshore bits on and so forth, right? So I don't think it is something that would be a significant cause of concern because they have been executing on what they have committed from a margin expansion trajectory. I believe the company also had communicated about the 15%. Given the way they are delivering, I think they are on track to deliver the margin expansion. In fact, what we also believe is with the H1B sort of regulatory headwinds that have come, possibly there may be more work that would go offshore, which would actually benefit the company in the improvement of their margins as such, right? So, yeah. Overall, I think it looks very good from a set of numbers perspective.
Right. Thank you so much, Mr. Nayak and Jasmeet, for joining us and helping us decode the numbers from the whole picture. But moving on, viewers, Google has announced a massive investment of 87,520 crore to set up an artificial intelligence data center in Visakhapatnam, a move that promises to give a significant boost to both Andhra Pradesh's economy and India's digital ambitions. The project is expected to generate thousands of jobs and attract a vibrant ecosystem of AI-driven businesses to the region. Adding to the momentum, Adani Connex, a joint venture of Adani Enterprises, is partnering with Google to cement the city's position as a key hub for technology and innovation. Let's go across to my colleague Rishabh Bhatnagar now for more details on this investment. Rishabh, over to you.
Right, you have a major announcement coming in from Google about a $15 billion investment that they've announced to set up a new artificial intelligence hub in the state of Andhra Pradesh in Visakhapatnam. What we're also picking up is the fact that this will be a gigawatt scale AI hub. What this essentially means is that this will be a 1 gigawatt data center at the very least. You will also have several other undersea cables that will also be using Vizag as a station hub for Asia, and also you'll have a major sort of energy and power infrastructure as part of this very campus to also fulfill the needs of this particular data center. Remember, the sort of energy that is required to keep these data centers running has been a cause of concern, and that is something that has been kept in mind as well. What we're also seeing is that Google has said that it will be housing all Indian data locally, and that is to meet India's sovereign needs. And apart from that, you also have the full stack AI infrastructure that Google will be be providing as a result of this announcement. What this will also contribute to is, of course, the government's India AI mission. Google will be contributing to the compute capacity that the government wants to expand under that India AI mission, and these GPUs and TPUs will be available to others as well, like startups, other private companies that require these processing units to train their AI models, to train more and more of their AI programs. That is something that Google will also contribute towards. You had the ministers, you had Ashwini Vaishnav, the Minister for Electronics and IT, the Finance Minister Nirmala Sitharaman, Chief Minister Chandrababu Naidu of Andhra Pradesh, and also the Electronics Minister Nara Lokesh, all of them in presence, all of them said that this is a major decision both for Andhra Pradesh as well as Google, and this is a sign of more to come in terms of investments coming in terms of developing India into an AI hub.
And as Rishabh said, this is a sign of developing India into a major AI hub. And to discuss more on this, I am being joined by C.P. Gurnani, co-founder and vice chairman of INOS, and Jaspreet Bindra, founder and MD of AI and Beyond. Welcome both of you, gentlemen. Thank you so much for giving us your time in discussing this topic. Let me start with C.P. Gurnani. According to you, sir, how might this $15 billion investment influence India's ranking in global AI competitiveness? And what sectors, according to you, do you think will see the earliest economic gains? Also, if you could shed some light on why do you think Google chose Visakhapatnam out of all the places in India?
Malika, you know what reminds me today is 1998 when Chandrababu Naidu wooed Microsoft to come to Telangana or Andhra Pradesh, combined Andhra Pradesh. None of us knew what that would mean and how it will change the Indian landscape, particularly for the GCCs or the software development centers. I think what Lokesh Nara and Chandrababu Naidu have done now is literally position Vizag as the AI capital of India. Clearly, this is, so I look at it from two different perspectives. I was talking to a Google's competitor and talking to them about the cloud business, that the way it is growing for them. The whole of Asia, 5 years ago, their business was $300 million. And Thomas Kurian, who works with Sundar Pichai, I am told his Asia Pacific business is now almost $8 billion. India, which was practically nil, is now about $1 billion business for them, only for cloud. Now, the point I'm trying to make is it's good for Google also, because Google now is in compliance with all the regulatory norms of data regulations and privacy. And number two is that this creates a launchpin or gives them an advantage over other competitors. The second part is from an India perspective, clearly with this level of infrastructure coming into India, we can be sure that it will benefit the universities, it will benefit the industries, it will benefit the startups, it will benefit and create jobs. Why Vizag? I think it has always been one of those port cities which was waiting to be discovered, which was waiting to come into the limelight. And who else would bring it into limelight but Chandrababu Naidu.
Right.
Now also don't look at only as just the data parks or the data valleys or the data infrastructure. Look at the earlier announcements. I mean, there is a rhythm to these announcements. First announcement, Amravati and Quantum Valley. The second announcement that the fiber network across the whole of the state. The third announcement is hydrogen policy. What is hydrogen? Hydrogen is equal to power. Number four, a few months ago, Prime Minister inaugurated a new setup with NTPC for alternate energy. So I think there is a lot of symphony in all these announcements. Obviously, it means job creation, but more important is it means AI first as a state, and Vizag will benefit, but more than Vizag, I think India will benefit.
Nani, very well said. You, in fact, have given us a series of pointers to look at from the perspective of how it's not only going to benefit Andhra Pradesh, but also India and also Google. But, Jasprit, getting you in the conversation, given your expertise, what single risk, be it regulatory, environmental or market-driven, do you think poses the biggest hurdle, and how can it be mitigated in this case? I think,
okay,
yeah.
I'm back now. Yeah.
Yes.
I was saying, to paraphrase something, a saying which Spider-Man, the movie, made famous, is that with great investment comes great risk. And I don't think that with any big investment you can go with saying that, look, all of this will be risk-free. Before I come to the one or two big risks, I think I do want to add on to something Mr. Gurnani said. I think Mr. Naidu has this ability to see around corners, which many of the other leaders, politicians don't have. And so he saw this whole digital revolution and positioned Hyderabad with high-tech city many, many years back. Today, he's not only focusing on AI, he's focusing on frontier technology as a whole. So it's AI, it's quantum, it's green power, all the things that Mr. Gurnani mentioned. Now, with all of these, while it positions India and Andhra Pradesh